Good morning, everybody. It is Tuesday, February 13th, 8:20 a.m., and you are here back again on another Market Open. Zigbing BlackRock says, where are you? I'm here. 8:20. I'm here for work. I showed up because I got a job to do. You got to go to work. Now, my mom, on the other hand, and my sister, on the other hand, did not show up for work because they work at a school. And one of the good things about working at a school is that when it's snowing outside, especially when you have a snowstorm the way we have in New Jersey, that's New Jersey, for those that didn't get the accent, school gets canceled. Now, I didn't think their school would get canceled. I saw the report last night. Me and my mom always have a little fun debate. She's been working as an administrator in the school since 2004. So basically 20 years now. And every time she thinks we're going to get a snow day, she prays for a snow day. I'm like, we're not going to get a snow day. I looked at it, was like it was going to rain at 11 a.m. I was like, we're not going to get enough snow. I woke up and we had more than enough snow for school to be canceled. So she woke up at 5 a.m. I went downstairs and I was like, you're not going to do anything today, huh? And she was like, nope. I was like, all right, so I'm the only one who has to go to work then. I guess I'm the only one who works in this house at this point because you don't get to go to work. So we are here today. We have CPI in 8 minutes. It's going to be very, very important. It is going to determine the trajectory of at least the stock market for the next couple of days. I mean, if we get a hot report, it's not going to be the best. If we get a good report, we'll see if the market is able to price in some of those gains. Given how much we've run, we've got Bitcoin at 50,000. We got Palantir trying to maintain $25. We got Datadog earnings. We got Coca-Cola earnings. We got Waste Management earnings after hours today. We have Robinhood earnings. So today's going to be one of the most exciting days in the market. And we've obviously got a lot to talk about in order to discuss everything going on today. CPI in 8 minutes. I Show Sad, Help Me 100, Brent, Nick Piercy, Jagger, David, Algoron, Hyper and Medium, Gift Magic, Quarantine Quartet, Jayberg, Noodler, Richard, TPLJ, Richard, Gift Magic, Multidimensional, Jagger Float, Alexandria. Wow, we have some new names in the chat that I haven't read before. Good morning. Good morning to all of you. Thank you all for being here. Kyle, thank you all for being here today. Billy Bag Donut says, Amit, I'm here. We can start the show. Billy, we can now start the show. All right. Gift Magic says, tell that CPI to be cool. Hopefully that CPI is as cool as it is in New Jersey. And in New Jersey, it is ice cold in regards to what we are seeing with the snow. And maybe CPI ends up turning out that way. We're going to get CPI in about 7 minutes. I'm going to pull up the website for where we get it. It's the Bureau of Labor, BLS.gov. I'm going to put it here in the chat if anyone wants to check it out. And we'll be refreshing it. And in 8 minutes, we will know what the actual results are. Shopify's down 10%. What? Wait, do they have earnings already? Do they have earnings? Did I miss? I thought they were after hours. Hold on. I thought they were after hours. We can talk about that for the next couple minutes. They can't be down 8% for no reason. Yeah, they just had earnings. Okay, so let's go through it. Let's talk about Shopee earnings. Datadogs is also down 10%. I was going to talk about Datadogs. Datadogs, they had a good earnings. Their guidance was like, I think 20 million less it was about 20 million less than what the street wanted. They beat on revenue. They were growing 26% year over year. Guidance, I didn't think was that bad, but apparently the street thought it was bad. And that's why we had some decline there. But let's look at Shopify and then we'll talk about CPI because that's going to be important in the next couple of minutes. Okay, so Shopify beat 2.14 billion on revenue versus 2.08 billion. EPS 0.34 versus 0.31. They beat on EPS and they beat on revenue. Why is the stock down? I'm very curious. Financials, news, press release. Okay, here it is. Does anyone own this stock as well? Let me know in the chat what you guys think. Truflation's predicting 2.5% CPI. Yeah, the rest of the banks are predicting anywhere from 2.9 to 3. Real quick, this is the metrics, and then we'll look at Shopify. This is what the banks are saying for today. Deutsche Bank at 2.9, Wells Fargo at 3, TD Securities. All of them think about 2.9, which I think would be incredible if we get 2.9. I mean, Truflation has us at 1.3%, even though they're thinking we're going to be at 2.5 today. So we'll see what ends up happening, but it's going to be really interesting, where this market goes. And the market's red in the pre-markets. I think either they're expecting a hot report or they're just selling off because we're getting a lot of momentum. And so CPI is going to determine a lot. Okay, Shopify, fourth quarter revenue up 24%. Free cash flow margin hits 21%. Full year revenue up 26%. Free cash flow margin achieves 13%. Why is the street tanking it, though? What happened? It has to be something in their guidance. Revenue 2.1 billion, GMV 75 billion. Shopify is processing every 90 days. That's incredible. That's up 14 billion year over year. Gross payments volume 45 billion. That's up 60%. Merchant solutions is up 1.6 billion. Monthly recurring revenue 149 million. Cash, they have 5 billion in cash. I think they have 2 billion in debt. I might be wrong on that, but I do think Shopify has a decent amount of debt. But I'll have to check that out. Okay, so what is their outlook? First quarter, revenue to grow at low 20s, which translates into year-over-year growth in the mid to high 20s. That's not enough to tank it. Gross margin for Q1 is expected to increase. That's good. GAAP operating expenses to be at low teens percentage. That's good. Stock-based comp approximately 105 million. I don't know if that's good or bad. Free cash flow as a percentage of revenue to be in high single digits. Why did the street tank it, dude? This is not a horrible report. I mean, I don't follow Shopify that closely, but down 8% on this. This is what scares me for something like Robinhood today. Like, as bullish as I am, the street is tanking these stocks for the hell of it. It almost seems. Datadog did not have bad earnings. I looked at Datadog's numbers. They were, okay. So they're only down 0.71%. They were down almost like 8% before. So they recovered. I would imagine Shopify recovers a little bit as well. I don't know if Shopify deserves to be down 8% on this report. I know people are saying the valuation stretch and it's up 20% year to date. It just erased half of its gains for the year because of this report. And I don't know if this report is the worst thing in the world. Andy says he has 250 shares at $31. Not bad. Simon, yes, it is trades too expensive for low 20s in growth. Okay, so that, that's what I think most people say, that Shopify is pretty expensive given the growth, which I always felt, which is why I never bought Shopify, but I kind of always felt Shopify is one of those stocks that, it's going to be a little expensive given the nature of their platform and what they do. That's interesting, dude. That's interesting. They're a $100 billion market cap, if I'm not wrong. Shopify is, 91 billion. Wait, no, 114 billion, and they do 8 billion a year in revenue. Yeah, you could argue it's a little pricey. It's a little pricey. Taking profits. Yeah, I think that's the other thing. If your earnings suck, the street's going to take profits, right? The street's not going to wait for your profits for them to take profits if they think you don't have the best earnings. So that's another thing that ends up happening as well. Okay, we have CPI in 2 minutes, folks. I will be refreshing the screen and we'll keep going. Just to give you a reminder, last month we had CPI come in at 3.3 when it was revised. As you can see right here, February 13th, we're going to get the January CPI. That was December CPI. I am expecting I'm expecting 3. I don't want to say 2.9 because I feel like if we don't get a 2 handle, that would suck. But I think 3 could happen, particularly because of shelter. We know that inflation data is lagging. Jerome Powell himself admitted that inflation data is lagging on 60 Minutes when he did his interview. So I think 3 would be realistic. 2.9 would be amazing. Now the market is down in the pre-market now. And why is the market down in the pre-market? Well, I think either the market has, decided that CPI is going to come in hotter than expected and they're scared, or CPI is good, but obviously we got the S&P at an all-time high. The broader question is, can it keep going higher? S&P right now at 499.37 in the pre-markets. Can this baby keep going? Is there enough juice left to squeeze out of this lemon? And if we get a 2.9, get a 2.7, 2.8, we are going to see a very interesting market in terms of how it reacts and where it thinks it has the ability to keep going. So we got about 30 seconds, and let's see what ends up happening. Let's see the twos. Yeah, I agree. If we get the twos, this is going to be fun. This is going to be very, very, very fun. But we got to get the twos on the inflation. Yeah, we know it's already in the twos. It's just a question if the data has caught up to the way the Fed tracks it in order for it to get to the twos. Shelter is going to be really important. Energy is going to be really important here. Energy was up last quarter. The Red Sea Houthi crisis that started happening in January, so I would imagine that has some effect, but to what extent, not really sure. All right, we're loading. Here we go. This is the game where we keep pressing this thing, we keep refreshing, and see what we can get. Oh man, this is gonna be. We're gonna see the markets move instantaneously as soon as we get this number, and then we're gonna see what happens. Okay, this is the game. We gotta wait. Okay, here we go. We got the number. Where are we at? Wow, it's a hot report, guys. 3.1. It's lower than last month, but it is completely against all expectations. Wow. Let me check the markets real quick. Yeah, there you go. The market's falling. Oh, what a beautiful day. Of course, this one number destroys everything. That is not a good number. S&P is down almost 1%. Palantir, Robinhood's down 1%. Palantir is down 2.33%. Google, shout out to selling Google yesterday. That sucker's down 2%. Oh my gosh. ARM Holdings is down 7%. Bitcoin's okay, 49.6. QQQ down 1.3%. TFC down about 0.36%. Short QQQ is up 4%. Tesla's down 2%. Enphase is down 3.69%. I'll get into the numbers real quick. I'm just looking at some of these stocks. CleanSpark's down about 1.1%. PayPal's down about 2%. AMD is down about 1.2%. SoFi's down 3%. Rocket Labs is down 2%. Snapchat's down 1%. Verizon is up. Spotify is down. Wow. There you go, folks. That'll do it. That'll freaking do it. That'll do it. All right, let's read through this. So just to give some context, the market was expecting, or at least banks, right, all the big investment firms, 2.9 to 3.0. This is good. We're down from 3.3 to 3.1, so we did decrease, but it's not as much as the market thought. And again, that expectation versus reality and the perception of that ends up ruining stuff. All right, so here we go. Index for shelter continued to rise in January, increasing 0.6% and contributing over 2/3 of the monthly all items increase. So shelter is what's creating, it seems, this not optimal inflation report, at least for what the Fed wants to see. The food index increased 0.4% in January as food at home index increased 0.4%. In contrast, energy fell almost 1% over the month due to a large decline in gasoline index. Okay. That's probably has to do with some of the stuff going on in the Red Sea. So energy fell, but shelter is that one thing that's ruining a lot of this report. The index for all items less food and energy rose 4.4% in January. Indices which increased in January include shelter, motor vehicle insurance, and medical care. We know motor vehicle insurance is going out the wazoo, so that's definitely something that's to think about when it comes to inflation. The index for used cars and trucks and the index for apparel were among those that decreased over the month. Okay, so used cars came down 3.1% over the past 12 months. There you go. Energy fell 0.9%. The fuel oil index decreased 4.5% in January. In contrast, the electricity index rose 1.2%. Natural gas increased 2%. So fuel oil is down. Natural gas and energy and electricity are up. Energy is down 4.6% over year. All items less food and energy rose 0.4%. The shelter index increased 0.6%. Again, that was the largest factor in the monthly increase in the index for all items. And we know there's a lag in shelter in regards to new houses that are being built and rents on apartments. So if that starts to come down, which we think it will, I mean, all the data is pointing to the fact that that's going to come down and we're going to get deflation there. We should see a sharp decline in inflation. But as of now, the Fed has not been able to track that data in a meaningful way. Used cars, let's look at them real quick. Used cars, those are down, which is good. Used cars, yeah, that's down. Index for used cars and trucks fell 3.4% in January. That's not bad. That's a hell of a decline month over month. The apparel index also decreased 0.7% over the month. All right, so those are the numbers. They're not the best numbers. Now, granted, this actually might be what the market needed, because I think a lot of us were getting pretty nervous about where the market was going, and we'll see if the market ends up staying at these levels. But yeah, you got Robinhood down 1.5%. You've got Palantir down 2.69%, 24.41 right now. Google down 2%. Enphase down 4%. What else? You got Tesla down 2.3%. Tesla now 183. It is $3 away. Tesla was at 195. Like, was it on Friday? Now it's at 183. We get to 170s. That's when I start thinking a little bit more about buying up some Tesla. But that's down. Coinbase is down 2.99%. Yeah, every stock's red. Every single stock. Datadog, look at this. Now down 5%. They were down 8%. Their earnings were I didn't think horrible, so they recovered to being down 1%. Now they're down 5%. Shopify is down 12%, dude. Oh, boy. Arthur in the chat, who shorted Palantir, he's here to brag that his shorts are looking good. Yeah, man, your shorts are looking good. You got a hot CPI. Your shorts are going to look good right now. Investor Frank says, should be coming. Market's been going up since October. Look, I agree. I think we all needed a little bit of a pullback. The question now is, how long is this pullback going to last? And is this pullback actually going to be a pullback that sustains itself, or is this going to be a pullback the market eats? We've seen, and I don't even want to call this a pullback. This is like a this is like a little baby decline, right? We've seen the market absorb all these over the past couple of months and recover, but it hasn't really had any momentum. Let's see what CNBC has to say and get there, and then we'll keep going from there. CPI, if you're just joining, came in hotter than expected, 3.1% month over month. The market was expecting 2.9.
So you go to every single state and ask them for permission to raise rates. It took a long time. Those auto insurance companies were dealing with getting hit really hard because the cost of fixing things skyrocketed during the pandemic. It was impossible to get parts. You had to pay for a lot of things. They all went and started asking for increases, and that takes a while to work through. So that might explain that in part, but that doesn't mean it's going to go away. As people renew, you'll continue to see some of that stuff.
Yeah, I think you're right about that. I think there's this general trend where it looks like, January is a time when they orient towards those price increases. Look, I would say the jury is out. I think the Fed has been right to be cautious here. They're the ones that told the market it's going to be a bumpy ride, that inflation does not run a straight line down, that it's going to be up and down a bit over time. So I think they had it right. What is good, as I pointed out in the 7 o'clock hour, is that the market and the Fed are closer together, or we're closer together coming into this number, with the Fed more skeptical, the market more exuberant. And now, of course, the market has taken another step, as you can see in some of these yields and some of the outlooks for rate cuts, take another step towards the Fed here.
Okay, let's talk a little bit more about it. EJ, you want to weigh in on what you think's happening here and how big of a problem this is going to be for the economy, for the markets that have been waiting for a cut?
Well, in terms of the economy, I think this is a really big problem, because what we've seen is M2, for example, not declining, not flatlining, but growing ever since October. The Fed is allowing it to grow because they're allowing all of this money to move out of sterilization to boost bank reserves. That's causing equities to go up, and it's also causing bank credit to expand. But, the other thing that we have to really, really worry about here is the fact that the CPI is actually understating inflation. We talk about how there's this lag in housing and rents, for example, but we don't seem to be talking about the fact that the CPI is only measuring rents. Even the component of the CPI that tries to estimate the cost of home ownership still relies on rents. And because the cost of home ownership has risen 4 times as fast in the last 3 years as rents have, it has grossly understated the cost of home ownership. So instead of being up about 20%, it's actually up about 80%. But that's not coming through in these numbers.
Hey, Stephen, Rick, if let's say we're trying to figure out a scenario that makes Professor that we had on earlier, I don't know if you saw it, Rick, but Steve was referencing it. This is like the nightmare scenario, Steve. The professor thought that they're too tight right now. But let's say the economy just isn't cooperating, and neither is inflation. So they got to stay too tight for too long. Even though maybe they should be cutting, they stay tight, and eventually we get a slowdown or a recession. That's like a blast from the past, isn't it? Where they can't get it under control, even though the conditions are already too tight. Is that how we get a recession eventually, Rick?
Well, listen, I think that the Fed keeping rates where they're at, higher for longer, is the right decision. I do think that there's certain aspects within the economy where prices are going to remain sticky. But the issue is, Joe, is that the Fed can't really help those areas, whether it's fire insurance, auto repair, the cost of autos, EV issues. All these things moving forward are not going to be slowed down in a dramatic way, no matter where the Fed pegs interest rates. Much of it is government policy, and government policy goes against economics. Hence, we have many of these issues. I think sticky inflation is going to remain, but I think it's a completely different animal than the type of inflation that we're most fearful of in the 70s.
Hey, Steve, I'll let you weigh in on that in just a second, but I want to get Skanda in because he hasn't weighed in yet. Skanda, go ahead.
All right, we'll go back to them in a bit. But yeah, for those that are just joining, this is not the best CPI report. This is really not the best CPI. It's funny because we're down from 3.3 to 3.1, which is actually very good, quite frankly. We reduced it, which is what we're supposed to be doing. That's good. It's just when you got the S&P at all-time highs, the QQQ at all-time highs, it's like, wait a second. you need to justify that. And in order to justify that, you got to have inflation aggressively coming down. Now, in general, you've got a lot of people that don't believe these inflation numbers from the Fed. They think that they have incredibly bad lagging data, and that shelter, which the Fed is thinking is the majority of the reason for the inflation, is actually not taking into account what's happening in reality when it comes to shelter. Now, we did see mortgage applications last week decline year over year, for the first week of January, because the first 3 weeks they were going up, and the average price for a home started to go higher as well. So that, I mean, this is probably correct in the context of shelter, but is it this correct for it to be 0.6% out of the 3.1 for inflation? I don't think so. I mean, just given the other data that I've seen in regards to rents coming down and new homes going up. If that's the case, first of all, we're definitely not getting a March cut. That's like that. If you were expecting a March cut, it's not happening. S&P right now, 495 in the pre-markets, down a full percentage point. March cut's not happening, and that's okay because, Jerome Powell basically told us in 7 weeks we're likely not going to get a March cut. My boy TJ just texted me. He bought 30,000 shares of SOFI at $8 officially. He just sent me a picture just now. TJ, if you're watching this, I just got your picture. So our boy TJ, which we did a podcast with yesterday, check out the wheeling options #3. It was a very good podcast. I think you will enjoy it. It's all about covered calls and what to do, especially with Palantir. If you have strikes that are coming up, how do you get out of those positions? How do you roll them? All that stuff. But in this case, we are seeing a very interesting dynamic play out in the market where investors thought we were going to get a March cut. That's not happening. S&P now at 495. Likely going to get a May cut, but if that CPI number doesn't get to 2 by May, meaning 2.7, 2.8, etc., we're not getting that May cut either. The Atlanta Fed president yesterday said we're probably not getting to the summer, so that's like June, July, which means, look, if we don't get a rate cut for the next 7 months, how is the market able to justify going beyond all-time highs? We are kind of in a weird situation with the market. We are already at 500. Most analysts thought we would get to close to this levels, which is 510, 520. In the end of the year, in December 2024, we're here in February, which begs the question: did we move too quick? Did we just go too quick? And maybe the answer is yes. Funds interested in AI don't give a crap about CPI. That actually transitions us very well with what Arnie just said to our good friend Tom Lee. Tom Lee was on CNBC yesterday. Here's his thoughts about the market and what's going on, where he thinks things are going to go, and ultimately why he thinks this is not a bubble and why this is actually going to keep moving forward. But if you just came in CPI expectations, or CPI did come in hotter than expected, and as a result, we are probably not going to see that March cut. Real quick on the CME Fed Watch tool, I'm looking at March expectations now. Wow, 5%. We went from 77% 3 weeks ago to 5%. This is why I love the equity markets. Things can change immediately. Like the equity markets changes their mind off like the most minuscule amounts of data or the most, abstract data, but they change their mind. They are constantly evolving. And so we went from 5%. There's no cut. May, there is a 34% chance. June, there is a 80% chance. And then July, there's basically a 92% chance. So that's how the Fed is, or that's how analysts are now thinking of where these rate cuts are going to happen. All right, let's hear Tom Lee and his thoughts on what's going on in the equity markets.
Dow's one of the top strategists on the street, FundStrat managing partner, head of research, not the drummer, Tom Lee. Tom, it's great to have you back on. That weighting thing, this is not new necessarily, but it keeps growing. That bowling ball on top of a pencil, as I've called it, continues to get larger and heavier. Is it a reason at all for Tom Lee to be worried?
Brian, it's not. I think one thing the viewers have to keep in mind is the world is short of workers, right? There's a global labor shortage and there's demand for AI and automation. And it's these 7 companies, or the 8 or 9, that are providing these solutions. So their market cap's growing, not just because the U.S. economy is growing. They're really solving global problems. So I don't think that is necessarily a bad thing. It's showing you how important technologies become, U.S. tech companies.
Yeah, maybe. And NVIDIA. Okay. I mean, I think now we're contractually obligated to mention NVIDIA at least 4 times an hour. I'm kidding. Sort of, Tom. NVIDIA, basically the same size now as Amazon. It's part of that group that we talk about so much. Is it a mania? Is it deserved? You just mentioned AI, but I mean, we've gone from $150 to $700 in less than 2 years.
I mean, it's pretty astounding to see the ascent, but we also know in the last 2 years there's been a lot of transformation, and I think really critical mass reached for AI. So to us, it doesn't seem like a bubble. There's real demand there. We're going to find out next week, obviously. But if there is a shortage of workers, we know that over time we have to replace salaried workers with silicon, and that could be several trillion a year of demand. So I think it's too early to say it's a bubble.
How big of a deal, if at all, maybe it's not, is tomorrow's consumer inflation data at 8:30 in the morning?
Well, it's very important because we know the Fed has only 2 inflation reports before the March meeting. It's this report and the one next month. And so I think, the bond market's certainly going to react. I do think the bond market's been anticipating kind of a hot CPI reading tomorrow. So I think if it's a worse than expected report, I think the stock market could be nervous short term. But given how sentiment is and flows have been finally turning positive for stocks, I think it would be short-lived weakness.
Yeah, pretty amazing. You're not expecting a March cut, though, are you, Tom? It's May.
That's right. I mean, I'd say the market's been pushing out the timing of cuts towards May. I think one of the sort of sticky points in the CPI report has been auto insurance, and as that lingers, that makes the Fed nervous about whether or not we're getting towards 2%. But I do think the odds of a March cut are better than the 15% that are priced into the futures markets.
Yeah, Tom, I want to switch gears to Bitcoin. It's been a big couple of days, really, for Bitcoin. I'm sure you watched the Super Bowl last night. I don't know if you caught this. I did, and then I paused, and I took a picture of my screen, and I tweeted that out. CBS showing Jay-Z and Beyonce, because, of course, everybody knows Jay-Z and Beyonce. But look at that. Many people may not have noticed the guy they were hanging out with, the dude with the beard on the right to the viewer's right. Of course, Jack Dorsey, founder of Twitter, now runs financial firm Block. He's wearing a Satoshi Nakamoto sweater. Satoshi Nakamoto said to be the inventor of Bitcoin, which hit 50,000 for the first time in more than 2 years. Why am I bringing this up? Just a gratuitous Beyonce check. But hey, what a run in Bitcoin. What's changed just the last 2 or 3 weeks, Tom?
Well, we know that the ability to buy Bitcoin has changed a lot, Brian, with the launch of the ETFs, and there are multiple ETFs, and it makes it easier now for people who have traditional brokerage accounts to buy Bitcoin. I think it's a wonderful development because it is really allowing people to finally have exposure without having to necessarily store their own private keys. And I think it was great to see that sort of subtle reference at the Super Bowl.
All right, if you're just joining, Tom Lee doesn't think it's a bubble. He thinks earnings demand is real, and he may be right on that. The problem is that CPI is also real, and CPI came in much hotter than expected. We expected 3.1, as you can see right here on the screen. We expected 2.9, we got 3.1. Core CPI, we didn't talk about that as well, is at 3.9 versus 3.7. Now, core, this is why the market's really taking a dump. The Fed, we care about headline because it's whatever, but the Fed really cares about core. Right, core is sort of the determining metric, the foundational metric that allows them to make an argument for the interest rates actually being reasonable to bring down. Remember, Jay Powell does not want to be the Fed of the 70s or 80s that almost killed inflation and then it reaccelerated. And every time we get a report that's just not up to par, I think Jay Powell has nightmares, and he does not want to be that Fed. They already got inflation wrong back in 2021 when, I don't think they could have stopped Biden from printing another like 2 or 3 trillion in the whatever act it was called, Inflation Reduction Act, or the thing that gave us more stimulus money in 2021. I don't think he could have stopped them from doing that, but he could have definitely made a concerted effort to say, hey, if you do this, there will be more inflation. I think the Fed is allowed. I mean, I think Jerome Powell said that about student loans when Biden was trying to get rid of like $650 billion and they would have had to like print that money. But I think he voiced his opinion, and you're not supposed to voice your opinion as a Fed, but he did say, hey, this would probably not be the best for inflation. But he didn't think inflation was an issue. He thought it was transitory, right? So he didn't really have a public warning against printing that much money back in 2021. And obviously Biden wanted to give everyone $1,200 because that would be, really beneficial. And I think at the time I was like, yay, $1,200. And now, 3 years older, I'm just like, was the $1,200 really worth it? Was it really worth $1,200, dude? Was it really worth it? I don't know if it was worth it, man. Then we had a stock market that collapsed in 2022. Like, I don't know if that was worth it. And obviously inflation has gone up by almost 10% in June of 2022. I don't like, my favorite chips that I buy at my local store, they're like $1.80 now. They used to be like $1.10 just a year. Like it's ridiculous, right? And so Jay Powell got that wrong. I don't think he wants to get it wrong again. And so they're going to be very conservative with these cuts, even though they seem like they're bullish, because they just don't want to mess it up. Robinhood is down 2.25%. Nvidia is down 2%. Google, for those that missed it, I completely sold out of my Google position yesterday. It was worth $10,000. I made $1,000 on it. So, I mean, I put 9,000 in. When did I put it? In September. To make $1,000 after 6 months was a horrible trade. It locked up that capital. It just wasn't a good trade. It was a bad trade. But I got out of it at least yesterday because I was like, this is getting stupid. The market's getting too hot. And, Google, I think Google will do fine long term, but I just didn't want to have my money stuck in there. So if that money was in Meta, dude, that money would have done so much better. But I picked Google over Meta. And that's the mistake I made in September when it came to big tech. So I've cleared up some capital. I am now 14.5% in cash. I tweeted this yesterday. I would like to know in the comments, what percentage of cash are you in? I didn't expect a hot CPI. That's not why I went in cash. I went in cash because I was just afraid of how the market's operating. It's not fun to hold some of these positions, especially positions that aren't even innovating like Google, when, you've got the market being as exuberant as it is. So let me know what you guys are in cash right now, what percentage. I am looking to deploy this cash when we get a good dip on Tesla, a good dip on Palantir. I want to really deploy it against high conviction names. Google is just not high conviction anymore at this point. So we'll see what ends up happening, but this is what we're seeing right now. Lussy Picker is 35% cash. Evan says 0. I'm a student. I love it, dude. I love it. Evan, my best advice to you if you're a student, whether in high school or college, this is just my unfiltered life advice. You didn't ask for this life advice, but find a skill and start monetizing that skill in terms of getting paid to help people learn that skill. So I was broke in college as well. I knew how to do debate. So I started a little consulting firm. I called it a consulting firm because I thought it would be more official than calling it like a side hustle. And when I would go to clients, I was like, yeah, I have a consulting firm. It's a communications consulting firm that helps people understand, and I taught people how to speak, and I ended up getting paid a decent amount of money per hour. At one point, my senior year, I was getting paid almost $7,000 a month as a senior in college, which was really cool, right? Because you got $7,000 a month, you could do something, you could take some girls out, the bar, you could buy some drinks, and I'm talking. So find a skill, monetize it, get some people to know who you are, start a personal brand, because you don't have to be broke in college. You can make a little bit of money. 5% cash, 0% cash, 30% cash, 25%. Palantir's down 5%. Where's Palantir right now? It's probably in the 23s if it's down 5%. Palantir, yeah, 23.75. That's a dip. Well, I don't want to say that's a dip yet. We need to see where this thing actually goes, because Palantir's already, run up 50%. Down 5% is not really a dip. Down, 15%, I would say that's a little bit more of a dip. And we'll see if there's any buyers and if there's any appetite for them to be able to buying more. What else do we have? Crossroads says 5% cash. Van Bush sold all of his Palantir, 100% cash. Sachin, 40% cash. Wow, very interesting. Sachin is someone I respect very deeply in terms of his thoughts about the markets. He's basically half cash. Sachin, if you want to leave your comments in the chat for why, I think I know why. I think you think the market's just getting ahead of itself, but still would love to know. 30% cash. Wow, people. So you guys sold a bunch of shit the past 2 weeks. It's not just me. I was thinking that people are still in this market, but no, people are getting in the and we saw this with the money markets. Money markets funds on Friday, they went up by 16 billion. That's not a lot of money, but still $16 billion added to the money markets after decreasing. So it reversed the trend after last week. It definitely made me think that there are people that are a bit scared right now about this market. And the reason they're scared is probably because of the same reason all of us are scared, which is that things have run up very, very quickly. And when things run up this quick, we have to, sort of think maybe money should be parked a little bit later on the side. So 16.7 billion, this was February 8th. Now it's 6.02 trillion. Let me see if there's any update on money market funds. Yeah, we're still up 16 billion right now. Right here. Gerald's 15% in cash. Do you count emergency fund as cash? No, I would count cash as like invested capital type of cash. Like if you have $100,000 and then you have 10 grand out of that 100 grand on the side to invest, that to me is cash. Your emergency fund is totally separate from all your assets because you're never going to use it unless you have a major emergency, right? So to me, that's not necessarily cash. Neil said sold 15,000 of my 22,000 Palantir shares at $24.99. Neil, you pulled a Sham. Even though Sham was 1 cent better than you, Sham's brokers got him that $25. Dude, remember there was such a wall at $25 last week? That was Sham Sanker dumping 537,000 shares on the market at $25. I looked at the SEC filings today. It was literally 25.003. Like his brokers were looking at it tick by tick. They were like, we are going to get you this top Sham Sanker. And so, he got it. Interesting. So people took profits. Tattooed Investor says, why the panic markets are down 1%, even if they went down by 10%, it is well overdue. Besides that, inflation is still lower than the month before and going down month over month. Your comment is correct. There should be no reason for panic. Markets are only down 1%. And even if they went down 10%, it would be incredibly natural. I think all of us are now just trying to figure out, is this the correction we've been waiting for? Is CPI the tipping point? And I don't really know. ARM is down 8% because, quite frankly, I think that the market has a lot of veracity to internalize all of the bad stuff that happens, like a hot CPI, even though it's really not that hot of a CPI, and pull forward. And so I'm hesitant to say that, oh, this is going to be really bad, because I don't know, dude. Jay Powell went on 60 Minutes, nationally televised interview, millions and millions of people watching, and said, you're not going to get a March cut. The market was down 2% for a day, and then it just came right back. There is appetite for these companies. And I think we're going to need to see a few weeks of that appetite decreasing in order for this to go the wrong way. Robinhood's down 2.79%. Look, I'm holding a big position going into earnings. I did sell half my calls on Friday, so I did, clear up some exposure. I think this CPI really doesn't matter for Robinhood. If they kill their earnings numbers, they're going to be okay. If they don't, they're not going to be okay. So I don't think the macro is going to affect Robinhood that much, but we do see it down 3%, obviously, because a hot CPI just means that everything starts to sell off. TFC down 2%. Tesla 183. I'm looking for 175 on Tesla. Oh my, CleanSpark's down 4%. So they're down. Bitcoin is down a little bit as well. 49,629, down from 50K. Where's Shopify? Shopify getting hammered, down 12%. QQQ down almost 2% right now. What else do we have? Netflix is down about 1%. McDonald's is down. Oh, we had Coca-Cola earnings. Let me talk about those real quick, and then we'll move on. Coke earnings were actually good. Their stock was up in the pre-market. I'm assuming it's down right now. Oh, no, it's actually up. It's a traditional value play that's continuing to go higher. When growth comes down, as we're seeing with CPI, Coke goes up. So Coke earnings, EPS met expectations, 49 cents. Revenue, they beat. Organic revenue growth of 12% year over year, and they're guiding for 7% growth year over year when it comes to Coca-Cola. $10.85 billion worth of Coke versus $10.68 billion they were able to put up this quarter, which is not bad. Sachin says, it may or not be the crash we are waiting for, but the market has given some signs that it could be a local top until it sees further clarity of timing on rate cuts. I would agree. I would 100% agree with that. At this point, when we're at all-time highs, the market is definitely going to it's going to want to take a breather. The question is if the market will, or the investors will allow it to take a breather in order for it to keep going. DraftKings down 3.46%. Did they have earnings yet? I don't think they had earnings yet. I'm going to check. I think they had earnings this week, DraftKings, and we'll see. If they had earnings, I definitely want to check out their earnings as well. So let's see that. Chris said, just woke up. We did good by selling. Yeah, we did a decent job by selling, dude. Yesterday was the first day I actually made a move to position my portfolio in the context of like I had a gut feeling. This was at like 320. I was just like, you know what? This shit doesn't feel right. I could have been wrong, but like the CPI could have come in at 2.7. Google could be up a lot, but I just had a feel this shit didn't feel right. And I sold. I fucking sold. I took some profits and I said, you know what? We're not gonna hold through this. We're not gonna hold through this. ARM right now is down 10%. Oh my. Those who bought ARM at 160 are down. DraftKings are Thursday. Okay, so we'll cover DraftKings on Thursday. We'll listen to their call. They had a really good 2023, by the way. I think they were up like 100% in 2023 or like 80%, some ridiculous number. They had a good 2023. So let's see what they're going to guide for 2024 and what they're going to say. But yeah, ARM is down 10%. Look, I think we all knew this was going to happen. It made no sense to put up $70 billion of market cap in 2 days. Now, remember, ARM has only 90 million shares outstanding. There's 1.1 billion held by Masayoshi in SoftBank, and they're going to dump those shares on the market eventually. And when they dump, it's going to be not the best for ARM. Also when the founder IPO lockup period ends in March. So when that happens, we're going to see a little bit of downside when it comes to ARM. Edmund says he sold his entire position at 162. Wow. You guys are good at timing the market, dude. There's someone else in my chat who said they sold. You guys are really good. We got it. We got a nice chat here that can time the market. I mean, shit, that's a great sell. 162. That's almost the top. I think like 167 was the top or something. So that's not bad. But yeah, it is a bit scary to see what's happening right now. And then we got Bitcoin that's just continuing to do what it needs to do. Bitcoin here at what is it, 49,000 right now. It was at 50,000 yesterday. It's still holding for the fact that it's holding 49.5, and there was a lot of selling pressure yesterday at 49, and there were enough buyers. The reason for this is not that hard to understand. The ETFs are buying a crap ton of Bitcoin. At this point, I saw a stat yesterday. They bought 59,000 Bitcoin in the past like 4 weeks, which is almost half of the circulating supply that's available for these institutional ETFs, custodians of these ETFs actually buy. And like, that means they're buying up the crap out of this. And the reason they're buying the crap out of this is because they have the inflows to buy it up. ARKB is getting inflows. That's why they're buying Bitcoin. ARKB up 5% right now, down 1.2%. IBIT, BlackRock, they're buying up the Bitcoin. 28, they were up 5% yesterday. Now they're down 1.26%. The more money they get, the more money they can buy. And if they can buy, the more Bitcoin, the less Bitcoin there are in circulation in the overall supply. Robinhood down about 2.91%. NVIDIA, look at that. They're at 706. They're down 2.14% of the day. Where's SMCI in the pre-markets? SMCI is down 2.39%. Still 754, which is incredible. But it is down a little bit right now. You sold your entire arm. Paramount's laying off 800 employees. See, this is weird. We have such a hot labor market. Like in terms of, we added 350,000 jobs in December alone. But you have all these big tech companies, Paramount, Spotify, Google, Citibank laid off, or they're planning to lay off 20,000 employees, like PayPal, all these companies that are laying off 2,000, 3,000, 4,000 employees. Now, again, these are more white collar jobs. These are jobs where people are making probably 250 to 500,000 a year, especially these tech workers. So, I mean, they're not, really middle America. They're not hurting the people that are living paycheck to paycheck, but still we are seeing layoffs that are happening. A lot of these are government employees as well. That is true. SOFI. Yeah. SOFI is making an announcement, by the way. SOFI right now. Oh my God. SOFI is down 5%. Of course. I didn't even look at SOFI. SOFI, of course, it's under $8. Why not? SOFI is, I think, one of those stocks that I think that's beneficial to write covered calls on and scary to write cash secured puts on, because right now it's a 7% short float. And when you have cash secured puts on SOFI, you might end up being assigned those freaking shares because they just come back down to these strikes. You think they're not going to get back to 750 and they get back to 750. You think they're not going to get back to $8. They get back to $8. So SOFI is setting up some announcement. Someone said that this might be their version of the shock the world announcement, but this is the announcement on February 13th, which is today. I think it's going to be announced at night. I don't know. It looks like there's a basketball in the middle of this. And they say, as the next generation of banking, SOFI is also always here for the assist. Guess what? Inside, and you might be surprised what's waiting for you when it opens on February 13th. It's definitely a basketball. They use the word assist, so I don't know what this is going to be. Maybe they're sponsoring the NBA All-Star Weekend, something like that. Maybe they're official partners of the NBA, something, I don't know. But hopefully this is a better shocking of the world than what's his name? Than PayPal. They already made the announcement. They already made it. Okay, so why isn't it the first tweet on their Twitter? Why is this not? Let me type it in. SOFI NBA. Let's see. SOFI NBA. Oh, here it is. Oh, wow. Here we go. Okay. SOFI named the official banking partner of the NBA. SOFI becomes multi-year entitlement partner of SOFI NBA play-in tournament. SOFI partners with 5-time NBA star Jason Tatum to establish $1 million generational wealth fund. Ah, interesting. SOFI is proud to partner with the NBA to cement our brand as a trusted household name through the league's vast reach. As the next generation banking, we believe we can help millions of NBA fans nationwide achieve their financial goals and get their money right. We're excited to work with Jason Tatum. How much money did they spend on this? That's my question. How much money did they spend on this? That is my question. SOFI down 5.64%. Palantir down 5.43% right now in the pre-markets. How much money did they spend? Because I think it's a good partnership, but dude, I don't know. I mean, like, for example, the Kia, the car, they've always been an official partner of the NBA. I used to watch the NBA religiously growing up. Now I actually have a life and I don't watch grown men throw a ball into a hoop. Like I'm sorry, but like I actually have things to do. But when I used to watch the NBA in high school, I would see sponsored by Kia all the time. Let me tell you, I don't want to fucking buy a Kia. I never thought you know what I did? I took my Indian ass to the Honda dealership and we negotiated $4,000 off a Civic. That's what I did. Okay. So I'm not saying it's the worst partnership. I'm just curious how much this is actually going to increase their users with the announcer saying sponsored by SoFi. I don't know. Maybe I'm reading this wrong. It's not the most exciting to me as soon as I see this. I for the amount of money they paid, I'm very curious. How much do they really put into this? Like, this looks like it's a multi, at least tens of $1 million deal. This is not going to be a couple $1,000,000. This is what, 5 years? Yeah, I mean, if this is 5 years, or this is close to 5 years, I don't know if it's exactly 5 years. Yeah, it's not 5 years, but if it's about a year or two, this is going to be a decent amount of money. So I don't know. We'll see. Question: market open more downside? Yeah, dude. When this market opens, I think we're falling. When this market opens. I don't think. I mean, so this is how the market doesn't fall. Palantir at 23.58. You got to ask yourself a question: are there enough buyers at 23.58 for the market to withstand the collapse, right? Or the 5% drawdown? Are there enough buy side orders here at Palantir? Let's look at yesterday's order flow. Yesterday, we had 561 million leave, 533 million enter. Okay. If you look at SoFi, they had 74 million leave, 94 million enter. That's why they were up 4%. SMCI had 2.6 billion enter, 3.3 billion leave. That's why they were down after hours. And if you look at the S&P 500, they had 3.3 billion enter, 3.34 billion leave, 3.39 billion enter. That's why they were up 3%. So today we're going to have to see a decent amount of outflow in order for this stock to go down and a decent amount of inflow for the stock to go up. Volume right now on Palantir is 2 million shares. The volume yesterday was the lowest it's ever been in terms of the past 5 days post earnings at 107 million. The lowest before that was 150 million. I have made an argument that if volume does not get to that 190 to $200 million level, 200 million level, it's just going to be hard for the stock to keep moving up because they have 2 billion shares outstanding. You need a lot of people to be trading these shares, whereas, SMCI is 55 million shares traded. Also, Palantir's short report, I forgot to mention to this, you guys, this went up. Their short float went up as well. So in the context of their short float, and the SoFi short float went up as well. So Palantir went up slightly. This was right before the earnings. It went from 5.6 to 6.28, which makes sense, just given it started to heat up a little bit. So the shorts got a little bit more aggressive. So that's what happened. And then SoFi, the shorts doubled down, as you can see right here, up 27% from last time. So now the percentage of float, this is January 31st. So this was basically 2 weeks after earnings. This was 1 week after earnings. 17% sold short, up from 13.6% 2 weeks ago. This was actually on February 4th. The short report came out. So you've got SoFi that went from 13.3 to 17%. That's where you could have a legitimate squeeze. And Palantir went from 125 million to about 140 million shares sold short. Now you've got to ask yourself, Palantir's up 50%. Those shorts are underwater if they started at $17. Do they double down and do they say, hey, man, this is ridiculous. It's up at $24. We're going to increase the short percentage of Palantir. It doesn't deserve to be there. I don't know. We'll see in another week what that short flow looks like. But that is what we're seeing right now. Tanner says SoFi is the official bank of the NBA. Should I buy more? Tanner, do you want to come on the stream and give us your raw thoughts on this? I'll put the link in the chat if you want to hop on for a couple minutes and we'll get your thoughts. Tanner, for those that don't know, great channel on SoFi. Everyone should follow him. If you care about SoFi, I'm pretty sure you know who Tanner is already. And if you don't, he is the SoFi guy. When SoFi explodes, this is going to be the guy that is the poster boy for SoFi. And here's his channels right here. Tanner, I don't know if this is the best deal. I'm curious to get your thoughts. I think your conservative mindset around fiscal responsibility, I would argue you would say that we might have paid too much for this. But then the bias side of you that loves Anthony Noto so much might not criticize him here and said that this is a great deal. So there's going to be two conflicting sides to your thoughts. But I think maybe they paid a little. I don't know what the deal is, But I don't know, dude. I don't know if that many people are going to sign up to SoFi's banking account on their app because the NBA is a partner with them. And maybe I'm very naive here. I've never worked in advertising before. I think I have somewhat of an understanding of advertising marketing. There's probably a lot of people who work in the advertising industry that are like, no, this is a great deal. This is going to work. But I don't know how much money it's worth. I don't know how much money it's going to work. VIX is looking ready to pop. Yeah, the VIX has been going up, if I'm not wrong, over the past couple of days. Let me pull this up real quick. VIX is, yeah, look at that. Volatility index. So for those that don't know, when this thing goes up, it just means that there is a lot more, for lack of a better word, volatility in the markets, whether it's the downside or the upside, it doesn't really matter. But in the past 5 days, this bad boy's up 7.85%. Over a month, it's up 5%. Past 6 months, it's pretty much flat. So as you can see right here, when VIX was at 20, that's because we had like the S&P at 410. We were almost at 3,900 on the S&P. So even if it goes to the downside, the VIX can go up. But if the market goes to the upside, the VIX can go up as well. It's just a measure of the volatility index. It's actually good for Robinhood. It just means more people are trading, whether it's up or down. So we are seeing a lot more of a volatile market, and that's what's happening. That's what's happening as well. NBA is unwatchable. Yeah, I mean, look, I love the NBA. I don't have the energy to watch a game. Maybe I watch some highlights here and there, and even that's very brief. Like, dude, I love LeBron James. Like, he's one of my favorite athletes, and I can't watch a Lakers game. Like, I can't even watch the highlights. When I was in college, I didn't get to watch the full games, but I've watched the highlights almost every day. I can't even watch the highlights anymore because I'm just busy. You know, the sports, CNBC has become what First Take and sports debate shows have been for me. Like, yesterday was the first day I watched a sports debate show because I wanted to hear what they had to say about Patrick Mahomes because he won the Super Bowl. And I was kind of curious, but that's the first time I even remember in months of me clicking on, some type of sports content because it's just been a while. It's been a while. Let's get Michael Saylor's thoughts on what's going on with Bitcoin. Obviously, Bitcoin is going up. MicroStrategy is up almost 40% in the past couple of weeks after a nosedive. Let's hear what he has to say and how they are transforming the company into what he calls a Bitcoin development company. Let's see his thoughts.
Saw shares of MicroStrategy sell off, but now since January 11th, MicroStrategy is outperforming all of those ETFs. Walk me through your outlook for Bitcoin, and then we'll jump into earnings.
Well, I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique, and it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners.
Yeah, and of course we're going to get the halving event, which imagine will sort of shift some of those supply demand dynamics coming into the spring as well. Earnings last week, you rebranded the company or announced the rebranding of the company as a Bitcoin development company. What does that mean?
Well, it's a natural decision for us, given the success of our Bitcoin strategy and our unique status as the world's largest public company holder of Bitcoin.
So Bitcoin is now MicroStrategy is now a Bitcoin development company. Remember, MicroStrategy software is not growing. Their growth was like a negative 6% year over year. So, I mean, the only reason the stock is valuable, quite frankly, the only reason there's any momentum in the stock is because of their holdings. I think they have now 190,000 Bitcoin. Palantir down 5.5% in the pre-markets. MSTR, is it down? It's down about 5%. It's at 676. But this thing just look at this chart over the past 6 months. I mean, it went up to 727 January 2nd, went all the way down to 440. I know a lot of people who loaded up that 440 dip. It was looking scary at 440. And then it came right back up to 717 yesterday. Remember, MicroStrategy stock has to be $517.93 on January 17th, 2025, around that January 2025 range, or else they have to pay back the debt they used to buy the Bitcoin. If not, those shares, they use the company to collateralize the debt. So the debt gets paid in terms of stock, which means the debt holders, instead of getting the 0.75% interest they would get on the stock or on the debt, they would get MicroStrategy shares, which is way better, right? Because those shares would appreciate at about a 30% delta between the time they were given or the time they were assigned to the banks that gave out the debt versus when they were actually given from MicroStrategy. So they would rather make 30% on those shares versus the 0.75% interest on the debt. So I think the banks also want the stock to be above $517. But if it's below that price, they're going to have to pay back the debt, and they're going to have to probably sell some Bitcoin to pay back the debt, or else they're not paying back the debt. So this was a hell of a gamble that MicroStrategy did about 2-3 years ago when they, started to buy Bitcoin, and they were underwater in June when it was at 15,000. But it looks like it's going to pay off as long as Bitcoin maintains its momentum and MicroStrategy is at least above $517 by January 2025, or else they're going to have to pay back the debt, and that's not going to be good for the stock. Now, it will cause dilution when the debt turns into shares, and it's going to probably dilute shareholders by 3 to 5%. But I don't think shareholders are going to care because they're going to be up so much on MicroStrategy stock. The other thing when it comes to Bitcoin, this broke last night from Reuters. Peter Thiel, the guy who doesn't lose, invested $200 million in I think it was October of 2023 on Bitcoin when it was at 200 grand. Last summer, Founders Fund started to acquire Bitcoin when it was below 30,000 and purchased more Bitcoin and Ether over a few months. Sources added Reuters wasn't able to learn the average of those prices. Thiel has publicly praised Bitcoin, a currency backed on blockchain technology that exists outside the preview of central banks, and says it is a store of value. He obviously is very fond of Bitcoin. Peter Thiel is very anti-government. He is very anti-money printing. So it only makes sense that Peter Thiel invested in Bitcoin. 200 million in Bitcoin and Ether right below that $30,000 range is a hell of a investment. And you would imagine they're going to hold this for a while, because if we're in the right cycle for Bitcoin, it probably makes sense to make that type of an equity investment. And this is why Founders Fund is really interesting. It's not just the VC firm. They make a ton of different investments. They had the balls to buy Bitcoin at 29,000, knowing what was going to happen. And there you go. You've got Founder funds now inside of crypto. Arnie says, seriously, Thiel doesn't lose. Only mistake is not selling PayPal at the peak. Yeah. That is also true as well. So yesterday was the wrong day to buy calls. Well, it depends on how long those calls have in terms of expiration. But I don't know if yesterday, from that perspective, yes, because you're probably gonna get better prices on these calls. So if you bought calls yesterday, that's not the best, but it doesn't mean you're literally underwater, right? If you have time for them to expire. SoFi down 5.4%, Palantir down 5.11%. Robinhood earnings today is going to be very interesting. I'll be live streaming it with Jesse today, 3:45 p.m. Hot CPI is not good for Robinhood, but if their earnings are what their earnings should be, I think they're going to be good. I don't think they're going to be bad. And as a result of that, I think it's going to be okay. But look, this is what we got to see now. You got a hot CPI. I don't know how the market's going to interpret those earnings, even though I think the earnings are going to be good enough for the market to deal with it, but we'll see how it ends up playing out. Bitcoin now dropping a little bit, down 1.3%, 49,269, TFC 3601, short QQQ is up. I was actually thinking of buying this yesterday just as a hedge, but I didn't end up pulling the trigger. But short QQQ is inverse QQQ. It was at 1126 yesterday. It's up 5% for a reason. Well, it's because CPI came in hot and the entire market is red. Snowflake's down 5%. Tesla down 2.85%, now 182. Enphase, look at that, down 7.6%. I have no idea who in their right mind was buying Enphase at 135 yesterday. I just have no idea. But it's down 7%. Amit, what percentage of your portfolio is in PayPal? I think about 4%. Something like that, 4%. I did not double down. I bought a couple more options on PayPal yesterday. I put in like $500 more. I sold Google, bought $500 worth of PayPal. So at this point, my PayPal position is locked and loading. We got to break even at around 75. And again, I don't want to go through the entire thesis, but PayPal to me is one of the most deep value plays in the market. The question is, are they sandbagging on guidance, and will the market finally be able to reward them closer to July, when hopefully they've had a couple quarters to turn things around? So we'll see. But as of now, it's just, we'll see what the hell happens when it comes to PayPal. We'll see what happens. Jesse said 2.7. Look, I think, it's not just Jesse. Trueflation said that inflation's coming down, dude. A lot of people thought that this was going to be a decent report. But it seems like this was not the best report because inflation came down. We got an update on small business optimism in January. Take a look at this, and then we'll keep going from there.
Good morning. Small business optimism falling 2 points in January per the NFIB to 89.9 as sales expectations dampened to start the year along with earnings trends. Now, the top issue for small businesses last month, labor quality. Inflation actually slid to number 2. 39% of owners reported job openings that they couldn't fill in January. That's down 1 point from December. It's also the lowest reading on that metric in 3 years. The industries with the highest job openings were construction and manufacturing, along with non-professional services. Inflation, as mentioned, the number 2 issue. In terms of top issues this month, while it's still in focus for small business owners, it's down by 50% from its peak in 2021. And more owners are reporting that they're lowering selling prices at the highest level since 2020. Chief economist Bill Dunkelberg said in his commentary last month, small business owners can't set economic policy. They can only respond to policy changes. Interest costs are still significantly higher, 9% on average compared.
Now, also, we're seeing small business bankruptcies go up as well. Let me see if I can pull up that stat. Market open in about 9 minutes. Small business bankruptcies were up, I think, like 19%. Over the past 12 months. Yeah, here we go. December 7th, this report came out a month ago. Small business bankruptcies, 29%. They're up year over year. This was back in September 2023. I doubt, it's changed that much from there. So that's another thing. You're seeing small business optimism go down a little bit. Obviously, bankruptcies are on the rise. These are, whether these are larger companies, medium-sized companies, or even pizza shops, whatever they may be. That's happening. In general, it's hard to make a business work, right? So you would imagine that there is some level of bankruptcies going on, but also it's weird because the labor market is so hot. And one of the reasons why it might be hard for these small businesses to stay in business is because big companies are offering ridiculous salaries to people, right? And so why would you work at a small little startup or small business if you can get paid a lot of money from a larger company? There's so many jobs available. There's so many jobs that are open that it might be harder for some of these smaller companies to compete as well. On top of that, and wages have gone up, I think 4% year over year. So if you're a small business and you can't afford, the cost of labor, that's why it's good. That's why inflation is so damaging to the health of the economy, because you need inflation to come down so that people can actually hire enough people. And in order to hire enough people, you need to have competitive prices. Otherwise, people are just not going to join your business. If you don't have people to join your business, then you don't have a business, right? You need to have some talent. Enphase hit a top at 139.65 on January 22nd or December 22nd. Yesterday, it hit a top of about 132. So someone was buying shares at 132 yesterday on Enphase. I don't think this earnings run was justified, quite frankly. And now that we had rates or CPI come in hotter, rates, because to me, it was very obvious. Rates are not going to be down at least until May, if not until the summer. So I don't know what the market is front running. The guidance was very shitty. Even if we get a 50 basis points decline, that's not going to make solar demand go up astronomically. I mean, I don't think anyone wants to just immediately refinance their solar as soon as, get solar panels as soon as rates come down. So I don't know. Maybe the Enphase just stays elevated because the market's ready to give it a premium as soon as rates do get cut. But I don't know if that's going to be the most quickest way for Enphase to rebound. Palantir down 5.47%. Robinhood recovering a little bit, down 2.25%. SOFI down 5.53%. So SOFI and Palantir down both 5% on the day. Wow, look at this. Douglas says, look at CPI X shelter. It's 1.4% year over year. This is why shelter is so important. It is the biggest metric when it comes to CPI. For those that just came in, CPI expectations, CPI did not meet expectations. CPI came in at 3.1%. Expectations were 2.9. Core came in at 3.9 versus 3.7. Shelter was the majority, over 50% of the CPI read. And if you take away shelter, you're looking at 1.4% year over year. And the problem is you can't take away shelter, right? Because that's cheating. But I think Trueflation and a lot of the other broader macroeconomists are saying that shelter is not as high as the Fed thinks it is, which is why this may be a good dip. It might be a good correction, because once shelter comes in the right way, you're going to get a declining inflation closer to 2%. And the Fed's going to have to cut rates and the market should do better. But as of now, we're not seeing that. And that might actually be the signal to get some of these stocks at a better rate. Max says, you don't think they put this data out to bring markets down? No, I don't think the Fed does. At the end, I think the Fed's just stupid and they're bureaucratic and they're lazy with how they calculate data. Like, I mean, maybe you could have an argument, ARM down 12%, by the way, that the Fed's inadequate form of tracking inflation is a reason for why they want to manipulate the markets. But I just think the Fed's lazy and they're old and they don't want to be innovative. And it's sad that that's how we track data, but that's how we do it. There's usually a 6-month lag when it comes to shelter, which makes no sense. But that is why we are seeing the harder levels of inflation right now. I don't think it's at actually 3.1%. I think we're closer to probably 2.7. Palantir 5.23 down. S&P down at 494. So S&P is down 1.94%. Datadog down 5%. Datadog did about $600 million in revenue. They're guiding for $2.685 billion. Market wanted a little bit more than that, so that's why they're down 5%. But Datadog, I think, will recover. I don't think Datadog deserves to be here. Datadog's market cap is $44 billion. I don't know if Datadog's profitable. Someone can let me know in the chat. I don't think they're GAAP profitable. And they have a similar market cap to Palantir. Same thing with Snowflake at $70 billion. A lot of these SaaS plays are not really profitable. Palantir is one of the only ones that actually, became profitable for 4 quarters in a row. Now, granted, they're growing more than Palantir, so they're going to sacrifice profitability for growth. But if Palantir can profitably grow, that wouldn't be the worst thing in the world. Did you see that SoFi became the official bank of the NBA? I did see that, and I don't know how exciting that is. Let me know in the chat. Do you guys think that's exciting? Maybe I'm just I'm not seeing the vision, but SoFi being the official bank of the NBA, I don't know, dude. It's just, I want to know how much they paid for that. They paid $600 million to get the rights to that stadium for the NFL, which is a lot of money. And I mean, I would say it's worth it. I get it, but like, I don't know how much it matters for the NBA. I don't know. And I'm probably wrong on this. There's probably got a bunch of people that download the app because SoFi is the official partner, yada, yada, yada. But I don't know. Is it really worth how much money you paid, especially when they're trying to be GAAP profitable? Is it worth? Is it actually worth it? NBA means they get airtime year round. Yeah, well, we have to get the specifics of the deal. How is the deal structured? When do the announcers announce their name? When do their logos pop up? I mean, there's a lot of different things we have to figure out for this deal to actually be effective, or at least to judge the effectiveness of it. But it's not that interesting. Thomas says, admit the Google sell's looking mighty right now. Yeah, well, it's not just Google. I think if you, for those that don't know, I sold my Google position yesterday. If you sold anything yesterday, you're probably looking like a genius for now, right? Now I had options in Google, so I actually set a limit for those options, and they filled at 20 cents higher than what I filled them at when I put the limit at, which I was surprised. And they filled within 2 seconds, dude. Like usually they take some minutes to fill. It filled within 2 seconds. I was like, wow. Some schmuck really bought these options from me. I was like, hey, schmuck, you want to buy these options? They were like, okay, I'll buy these options. And they bought it. And so that's what we saw. So it was really, it was quite interesting that the schmuck bought it that quickly, but they bought it. And now it's just going to be a question of, if Google recovers quick enough for me to be the schmuck, or for that person to be holding the bag on those options. I mean, I saw them at 11, 12% higher than what I bought them at. It's not a horrible trade. The amount of time I spent in that trade, 6 months, is the horrible part of it. But someone did end up buying it. Tanner, I see you in the back. We're going to do the market open. So in about 5 minutes, we'll have Tanner on. So Tanner, I do see you. You can get yourself set up and ready to go. And then we'll have Tanner to talk about SoFi in about a couple minutes right after we get through this market open and see how bad it ends up going. Let's see. Palantir, we'll have our eyes on that. 5.71% on the day. We'll see what happens with Palantir and if it has enough people ready to buy the dip, or if it's just going to keep going down. I mean, I have no idea. I would say there's enough buyers, but then again, people might get scared and they might think that, you know what, this is the dip, this is the correction, this is the time to. I mean, if people are sitting on a lot of gains, remember, people have a lot of gains on Palantir right now. A lot of people are up. They don't want to go down. And in order to not go down, you got to sell before the thing goes down. So either that psychology is going to work, or the dip buying psychology is going to work with people saying, oh my God, 23, I wanted to get in because this is a $50 stock. And so we're going to see in 5 seconds how it plays out. 9:30 a.m., ladies and gentlemen, the stock market is now open. Wake your ass up. Here we go. 6.8% down on Palantir. 23.44. Now the market's fighting. It's not 7% down. It's not 8% down. It's stuck in that 6% range. So there's a ton of buy orders that are coming in, buying up this dip right now. As you can see on the left-hand side of my screen, the entire market is bloody red. We'll get back to Palantir in a second. The only thing that's up is freaking Coca-Cola. That's green. Robinhood down 4%. MicroStrategy down 7%. SMCI down 4%. IBIT and ARKB ETFs for Bitcoin down 3% respectively. ARM 12% down. They lost $30 billion in market cap as the market opened. Google down 2%. SOFI down 6.3%. Robinhood now down almost 5%. Nvidia down 3%. That's struggling to maintain above $700. C3 AI 28.57. That one is down about 9% on the day. C3 AI. So that's what's happening right now on C3. TFC is down about 2.1%. Nasdaq 15,592. Wow, the Nasdaq's down 2.18%. As the market was looking for an excuse to sell off, they got their excuse with CPI, which actually came in lower month over month, but it didn't come in come in lower than expectations. That's down 351 points. S&P 1.39%. So S&P is not bleeding as much as we thought it would yet. It's down basically as much as it was down in the pre-market. Tesla down 2.3%. Enphase down 5.653%. IWM Russell basically gave up all of their freaking gains they made yesterday. They went from 203 back down to 196. CleanSpark down 7%, 1475. PayPal down 4%, 5796. Alibaba down 1.3%. AMD down 3.3%. Where's Palantir? Palantir 2380. Look at that. There are people willing to buy the dip on Palantir. Palantir is 2374. It was just at 2330. This is what I felt, dude. There are people that want this damn stock. Volume on Palantir is already 10 million, dude. It's been 2 minutes. Liquidity exists for Palantir. And so if you want to buy or sell, there are enough shares, enough buyer or sellers in this market. I mean, look, 5% down, you would imagine it would take a little bit more of a dump. Nope, it's stabilizing because there's enough buyers. There's enough buyers. So we'll see. Well, this is actually good news because it means that maybe there really is a $20, more than $20, what do you call wall? Or sorry, not wall, floor to Palantir stock as it hovers in this range, and it can potentially consolidate there. 23 to 25 might be the average. Might just go all the way back up to 24. ARM now down 10%. S&P now, look at this. The market's recovering a little bit, guys. Look at that little green candle. SoFi now is not down 8%. They're down 5%. Robinhood now not down 6%. They're down 3%. This is something we talked about right before the market opened. We talked about the fact that maybe there's appetite to buy the dip across the board because this market just wants to keep moving forward. And this is not enough of a reason to tear things down. Shopify was down 12%. They're only down 10%. Datadog was down 7%. They're down 1.61%. Yeah, look at that. Nvidia's recovering too. Nvidia's only down 2%. They were down almost about 4%. Tesla's 184. It was just at 182. Enphase is only down 4%. It was down almost 8%. Look at that. Amit, are you going to buy the Nvidia dip? I am not. Not buying that dip. Wow, dude. Wow, there's momentum in this freaking market. People are buying. People are indeed buying. It's red, but it's not. Even so, look at CleanSpark. CleanSpark is at 15. It was at 14.30, literally like 30 seconds ago. Rocket Lab, $4.50. That's only down 3%. Where's SMCI? SMCI is barely down, dude. It's down 2%. Visa is barely down. American Express barely down. Let's look at some of these other plays. The crypto stocks are down for the day, but not down as bad. Now, Marathon's down 8%. Okay, so that one's bad. Coinbase is down 5%. They have earnings tomorrow. Robinhood down 3%. MicroStrategy down 6%. Bitfarms down 2.93%. Let's look at semis. All the semis are down, as you can see on the left-hand side of the screen. But they are recovering. They were down a lot more. And then let's look at banks. Banks are all down. HSBC is the only one that, now banks have been down because of the potential regional banking crisis we're in that I don't really think is a crisis, but that's why banks are down. Where's Celsius? Celsius is down 2.98% of the day. Celsius is down. Are some people using their cash that they sold out of yesterday? I'm not buying anything today. I'll say that. Unless things get ridiculous, my 15% cash is staying 15% cash. I'm still a little scared of this market. I'm a scaredy cat right now. SAS is down. Snowflake's down. Datadog's down. Palantir. Look at Palantir. $24, folks. maybe we are creating a floor to this stock. Maybe, just maybe, if you want to buy your shares, you're going to have to pay $24 freaking to buy your shares when it comes to Palantir. I mean, look, we're going to need a few weeks of consolidation here, but look, it's exciting to see us not tank as dramatically. Now, granted, the entire market takes a dump over the coming weeks. Palantir is probably going back to 20, but so far that's not happening. Mag 7 is all down. Amazon's down 2%. Nvidia's down 1.9%. Tesla's down 1.4%. Microsoft's down 2%. Meta's down 1.62%. Meta at 461. Apple down 1.39%. So Mag 7 is down for the day. Apple at 184. That's getting closer to that 170 range. Microsoft was at 420 yesterday. Now it's at 406. Microsoft 3.02 trillion. Apple 2.85 trillion. Nvidia's market cap is 1.75. Amazon's 1.74. So Nvidia is still above Amazon. But we are still seeing Palantir hold up. We are seeing Palantir actually hold up. Verizon is up. Yeah, of course. Verizon is up. Verizon is one of those value plays that if it reverts to the mean, then it's going to do well. And it should do well in a growthy cycle. And it should do well if growth stocks take a little bit of a beater, because Verizon has something called a dividend. And when you get a dividend, you get some money. TFC also has that dividend, but TFC is a regional bank. And so that's why we're seeing some problems right here. Palantir, where are we at right now? Market's recovering. Robin at 1174. Palantir 2407, down 3.87% on the day. All right, Tanner, I'm going to bring you on. If you are good to go, you should be able to hear me, and we'll get your thoughts on what's going on SoFi. Tanner, you are live right now.
Amen. Sorry, I got no camera right now. I don't want to be in here for too long. I think it's funny, man. You guys talking about Palantir being down still above $24 a share. I mean, try being a SoFi investor.
We're greedy now. We're greedy. 24 is the new 16, now we want 30. So
yeah, no, I had to sit here and watch Shopify just take a dump after great earnings, but just incredibly high expectations. So
okay, so give me your thoughts. SoFi, for those that are not here, thank you 1,400 people for being here. I'll put Tanner's Twitter in the description. Make sure to follow him there. SoFi, official banking partner of the NBA. I'm a bit skeptical on this. What was your raw reaction? Good deal, bad deal? You think they overpaid? Give me your thoughts.
Yeah, I mean, I'm seeing people message me saying, well, it's impossible that this is a bad deal. This is going to be huge. We literally have no idea how much they paid for this, right? So I think that this is exciting, but the reason why they picked SoFi is because they offered the biggest check, right? The fact that SoFi is, in my opinion, the next big thing in banking is not the reason why the NBA picked them. They would have picked Wells Fargo if they put up a deal. They would have picked JP Morgan if they put up a big deal. The NBA has their own personal reasons. So I'm with you. I'm sort of putting my judgment to the side right now and waiting to see what management comes out and actually says. But until then, I mean, it is exciting. They're doing this in golf. They're doing this with big stadiums. They're definitely seeing that sports are their place to see, great customer acquisition strategies. And maybe the NBA is the next step of that.
Okay, so let's say that they paid a reasonable amount. They didn't overpay. If they paid a reasonable amount, what's the bull case for them being with the NBA, in your opinion?
So the biggest bull case is that the only thing that's holding SoFi back, at least this is management's terms, is brand awareness. Okay? If they can accelerate how many new members they're bringing onto the platform, it's not just about a product moat that makes your company have the best products, right? What separates Cash App from, another peer-to-peer service? Well, it's because they have the best brand recognition. They have the best marketing strategy. Marketing, almost to some degree, is more important than your actual product differentiation. So, in my opinion, I think that this is super exciting because they might beat their expectations for member growth this year. They just got tweeted out by the NBA. They're going to be all over 100 million plus people watching all the time. It's pretty great for SoFi, and especially it's very North American focused.
Right.
Whereas, like, you see like Cash App doing a deal with F1, it's like, why? I don't even see the strategy there. You're not even a global company. So I don't know.
So basically your thoughts are, if we overpaid for it, maybe not the best, but if we paid a reasonable amount, then North American consumers are really going to start to have brand affinity with SoFi, and that's going to be important long term.
Yeah, you just need to see the logo over and over and over before you start realizing that this is a company that you trust. Some people need to see an advertisement 14, 15 times before they buy. So it's just about SoFi getting their name out there, and potentially people will start to bite.
All right, Tanner, last question, then I'll get you out of here. This market, you think it's too frothy, or what are you thinking right now about where we are in the cycle?
I mean, I'm a full-on growth investor. Most of my money's in companies like Nvidia, Shopify, Tesla, Airbnb, Salesforce, SoFi. So I've got all my chips on the table right now. I try not to look at charts like this on a minute-to-minute basis because they're going to make you go crazy.
Yeah.
You know what? Look a little bit longer term. Inflation might be stickier than people thought. I'm young enough to sort of watch it out. I'm trying to buy great companies with okay valuations, but unbelievable products and outlive cycles.
Right.
Yeah. I honestly try not to look too much into it. I think that I try to buy great companies.
Okay. Makes sense. Thank you, Tanner, for joining on. We'll talk to you again later. But yeah, the SoFi deal is exciting, and I guess we'll see if when we get the details, if this ends up being a really good deal for them.
Yeah, man. Thanks for having me.
Good stuff. Talk to you later. Bye, everyone. Or bye, Tanner. Not everybody. I'm not leaving everybody. I've got to keep doing my job. And my job is to figure out how Palantir is not falling because people want to keep buying this stock. Guys, it's down at $24.08. We all thought we were going to get a pretty disgusting dip. Look at the divergence here between Palantir and SoFi. SoFi was down 7%. Then it came up 3%. Now it's back down to 6%. Palantir was down basically 5%. Or 5.6%. Now it's back in that 4.2% range because it recovered. So this is going to be really interesting if there are enough dip buyers ready to go in order to grow their money, or if there's enough sellers that just have had enough of this and they're gonna take a dump. I'm looking at the book volume right now for Palantir. There are plenty of sellers as we're looking at right here. Yeah, I mean, there's just a ton of volume coming in. There's a lot of people that are selling right now. And the question is there going to be enough people to end up buying what is being sold at this $23 range? I think right now this is also algorithms more so than just retail and institutions playing with it right now because it's trading a lot with the rest of the market. But we're going to see how it plays out. Of the 500 S&P stocks, Matthew says the Magnificent Seven are responsible for the majority of the rise. When are the other stocks going to rise together? Well, we were talking about this yesterday on the market close. The IWM, which are small caps, are supposedly poised to start breaking out, especially because the narrative, remember, going into 2024 was that small caps have not really made a leg up in the past 10 years, quite frankly. All the attention has been going to large caps. Large caps just came off of one of their best years in a very long time, right? Almost every single large cap was up above 50%. That's not replicatable as easily. And so far, in the beginning of the year, you've had Nvidia go up 50%. You've had Microsoft go up almost 5-7%. So you've had some of these companies basically say, hey, we're just going to try to run it back. And now the market's wondering, well, can you guys actually keep it going? And if you guys can't keep it going, then we're going to have to move our money somewhere else. Meta is up 20% year to date, right? They had that phenomenal earnings report. Now they're giving a dividend, share buybacks, all that stuff. The ones that have been lagging, Amazon also is up 7%, are Google, Apple, and Tesla. And Tesla might be for more political reasons, quite frankly, than it is just for the cars. Even though the car business is not doing the best right now. It's not just it's a little bit more of a car business, not as much of a robotics business yet. Apple is struggling with iPhone sales and overall growth, right? Down only 2% year over year. And then Google just can't show that their search business is not going to be in jeopardy of being destroyed, which is what the street is afraid about, whether that's a right concern or not right concern. And that's why Google is tanking as well. So we might see small caps actually start to have momentum. And if that's the case, then maybe that's going to be the market rotation that everyone's looking for. Cash King is up 25% on his ARM short. Shout out to you. I mean, that was a hell of a short. It's not bad. I'm afraid to short companies. I don't think I've ever shorted a company. I wanted to buy puts on ARM, but I was also a little bit afraid to do that just given the exuberance. I don't think I've gotten to the point yet where I can buy puts on something effectively and be okay with it. Eventually, I will get to that point. But if you bought puts on ARM, they're probably doing well today. They are probably doing well. Yes, we'll be streaming the Robinhood call 3:45 today. Whether they're going to make a lot of money or lose a lot of money on Robinhood, we will see. We will see what happens. What's at Robinhood right now? Robinhood 1164 down 3% on the day. SoFi down 6.13%. Palantir just below 24 at 23.99. I'm not saying Palantir can't get back down to 19 or 20 over the next couple of weeks. I'm just saying it's really phenomenal that it's actually holding even 23, 24. Most people thought 23, 24 was a meme, and maybe it will be a meme. But right now, this has been almost 3 days where it's been in this range. We haven't even seen 22. We've barely seen 23 until today with the hot CPI. So we're gonna see. We're gonna see where it looks up. Why do you love Robinhood? I'm interested in a position. I actually did if you follow me on Twitter, I'm not going to go through the whole thing right now, but if you follow me on Twitter, I posted a 6-minute video. I'll just put it in the chat on Twitter of me highlighting my thoughts for why I'm excited about Robinhood. And so you guys can listen to that. I'm putting it right here. But in general, I just think they're undervalued. And that's kind of my core thesis. I'm still up on my options a lot based on when I bought them, because I bought them when it was cheap. And today's going to determine after hours if those options go up or if they, go down. And so we'll see. I'm not on Twitter. You should make a Twitter. Honestly, you should make a Twitter. Even if you use it once every week, you should follow a bunch of Palantir accounts if you care about Palantir. Also, Twitter is the best place to just get information on stocks, guys. It's way better than you just get to crowdsource. If you follow the right accounts, you're going to get so much information every day. You're going to feel productive versus feeling like you're wasting time. Master Goma says, when is the CPI report? Well, Master Goma, it was about an hour ago. And we had the CPI. And the reason the market's tanking is because we came in at 3.1 versus 2.9, 3.9 versus 3.7 on core. And that's why the market is a bit upset on CPI. And, we're now going to see over the next few weeks if that CPI actually is what the market's upset about, or if we can just keep going higher and higher. Let's get an update from Sandhills Brenda on what she thinks on CPI and where it's going.
Markets is Brenda Vangelo, Sandhill Global Advisors Chief Investment Officer. Was this on your bingo card?
It wasn't. We were really hoping we were going to see some more improvement, especially in the shelter category, which is very important for the overall CPI measure. But rather than improvement in that category in particular, we saw that prices effectively, by this measure, increased 6% year over year on an unadjusted basis. And we know that in the real world, that's not really what we're seeing from a rent standpoint, looking at some other measures. So it is frustrating to see this number. But I will say, when we look at the impact from the market currently, I think we're due for a little bit of a pullback. We've had a really tremendous start to the year in a year that where we were initially anticipating we would see the S&P probably appreciate in line with earnings growth, which is around 10 to 11%. So already at 5 prior to today. So I do think we could have a bit of a bumpy road here as the market continues to grapple.
But is therefore your expectation that we're going to be seeing lower equity prices for a long time here on out? Meaning, is the Fed really not going to be lowering? If you really don't believe the Fed's going to be lowering rates, I don't know what you think it's going to get pushed out to at this point. We're just setting ourselves up for a different type of recession.
Well, I think the Fed will lower rates this year. Our view is that we're looking at a May, June as being most likely. There are some other factors we have to consider here, and one being things like within the commercial property market, an estimated 20% of loans are maturing this year and need to be refinanced. So I think as the year goes on, we're going to see more of an impact from the higher interest rate environment.
Commercial real estate is something we haven't talked about in a little bit, but she's right. We're going to have 20% of those commercial real estate loans start to be refinanced. And if the Fed doesn't lower rates, they're going to be refinanced at levels that are, well, obviously not advantageous, at 5.5%. Jess from Alaska says, on a plane from Alaska to New York, you're streaming over the Gulf of Alaska right now. That's awesome. That's so cool. Are you in first class, Jess? Are you in first class? Because that's amazing. I have this thing with myself. I said this publicly a year ago. No matter how rich I get, I will never fly first class. Now, everyone's probably like, oh, that's BS. If you make some money, you're definitely. I think to be humble for the rest of my life, I got to be in 37F, just to remind myself where I come from. Because I've been on a plane almost at this point. I think I've been on a plane like at least 700 times in my life. I've just been on so many flights. And I think I got upgraded to not first class, but like business class once. And my philosophy has been, you know what, to like really remain humble, even if you can afford it, you don't buy it. Now, if I become a billionaire, I don't know how I'm going to feel about that. But as of now, the ethos is we're not going to ever fly first class. So I'm curious if you're in first class. No offense if anyone goes first class. It's just for me, I always want to remain humble enough to be in economy. But first class does look pretty fun, dude. I've seen some new videos on the, especially on the Saudi Airways. They've made it very nice. They've accommodated very well. Derek says, dude, be smart. I fly first class using points every time. Okay, so this is the other thing, right? A lot of rich people are like, well, if you have the points, it's free, right? It's not about the price. It's not about the points. It's about the humility of being reminded, even if you're a billionaire, that your ass is sitting in 37F. Now, don't ask me to sit in the middle of two people, okay? I'm not doing that because I just did that the other day when I went to California to meet Kevin, and that was horrible. But I will sit in the aisle, okay? I've also decided aisle is better than window. Window is overrated at this point. Aisle is like you gotta pee, you gotta be able to get off easily. But it's not about the points. It's about the ethos, the philosophy of not being in first class. Now, granted, if I ever have a lot of money and it's really easy to just fly first class, maybe that changes. But as of now, that's what I'm feeling. TFC down 34.95, down 3%. Palantir down 4%. Palantir still maintaining $24, guys. Absolutely incredible. Google down about 1.3%. S&P is down 1.4%. S&P is actually not recovering. It's continuing to go down. Coca-Cola is up. Verizon is up. Short QQQ is up. If you were short the S&P starting at 500, you're up. If you were short QQQ at 430, you are up. And so we're seeing downside, but some things are recovering. Look at Tesla. Tesla's back at 185. It was at 182. Enphase at 121. That's down. CleanSpark 1488. It's a dip. Don't get me wrong. There's red, but it's not like the dip is compounding on itself. It's actually not turning into that massive of a dip. Even Robinhood recovering a little bit right now at 1165. Sachin says, I have done time flying economy, and with the amount of flying I used to do, anything above 3 hours is business for me. I made the decision 10 years back. I keep clear with employers, clients, and your wife. Look, dude, look, if I actually do get the money at this point when I'm flying that many times, I'm probably going to start going first class or business or whatever. It's just, I like to have this philosophy that I'm never going to do first class. It's the same thing with a Rolex. Like, I never wanted to buy like a $70,000 watch, like I would just feel weird looking at a $70,000 watch. But granted, if you could flip the watch, it ultimately becomes an asset, right? And so there are a lot of ways to justify some of these purchases, just like with points, versus actually straight up buying it. Derek shorted SOFI, QQQ, and the S&P. Wow, what a mix! I knew you were shorting QQQ and the S&P, Derek. I didn't know you were shorting SOFI. Interesting. That's a hell of a mix. SOFI was up last week pretty well. So short QQQ, S&P, and SOFI. I wish there were inverses to every stock. You can buy SQQQ. I wish you could buy like inverse SOFI or inverse Google or something. And I don't know how complicated that would be, but like if you could just buy the inverse of any stock, you could. I know buying a put is a way to do that, but it would be kind of cool to buy the inverse of a single ticker. If you're super bearish on a single ticker, that would actually be really interesting if we could do that. You could buy short ARK. Where's ARK right now? Dude, ARK is up like 14% on the year, but ARK has not had the best couple months. Right now, $48.32, down 5% on the day. They're loaded up at about 32 million Robinhood shares. They have a ton of Coinbase, ton of Tesla. We should actually look at their holdings right now because we haven't looked at their holdings in a bit. But let's see what they're doing. Tesla Q is short Tesla. Yeah, I forgot. TSLQ. That is the short. That's the bearish short Tesla. That one's up 1% on the day. ARK is a short ARK ETF. Yeah, that is true as well. Okay, so let's pull up ARK Holdings. What is ARK holding right now? What has she got? ARK was on CNBC the other day pumping Tesla at $2,000 a share. At this point, it's getting comical because like it's just not at those levels yet. Amit, there is a new partnership with Palantir. Is it on their IR? Let me check if it's there. No, it's just the Bapco Energies one, at least not one I'm seeing. I'll talk about the Voyager space one today in the Daily Palantir episode, but so far I don't see a new one yet. Okay, so Coinbase, 5 million shares, 774 billion. Roku, someone was asking about Roku preview. We'll talk about that in a second. 6.7 million shares. This one makes no freaking... Dude, ARK has over $500 million in Roku. Out of all of the places you could put your money, it's stuck in freaking Roku, dude. Like, that's the part where I think investors are just like, what is this person doing? Tesla, 700 million. UiPath, 563 million. Block, Square. She gave Jack Dorsey $500 million. God knows why, because he gave Jay-Z $300 million to buy Tidal. I mean, like, it's just, I'm sorry. Square is ridiculous to me when I think of it. Zoom, 432 million. That one makes no sense. Roblox, this one's just going to take a lot longer to play out. Where is Roblox right now? I bet you it's like a 37. Roblox is 42. Okay, so pretty much hasn't moved in the past couple months. Teladoc is another 251 million. DraftKings, 263. I think that's actually going to be okay. Shopify, 270. That's probably going to be okay, but ARK bought it at like $170, so that's tough. Unity, 285. That's going to be okay, but again, ARK is bag holding. Robinhood, I think, is going to be okay. I don't know what their average is on that, but I think they've gotten their average pretty much lower, 249 million. And then Ginkgo, she's got 200 million in Ginkgo. I don't know, dude. This is just one of the weirdest ETFs ever, dude. Like, buying the QQQ makes so much more sense than buying ARK Innovation. Like, the one thing she has from the QQQ, Tesla, is the worst performing out of the NASDAQ. It's so interesting, dude. It's so interesting how she's created this type of philosophy. And at some point, the stock market is like chess, dude. You either get checkmated or, you survive. And if your stock doesn't go up, you lose. You can wait it out as long as you want, right? And you can keep DCAing, but if your stock doesn't move up, you lose. So it's one of those things that it's tough. It's very humbling, these markets. It's not an easy game to win in. So that's why if you ever have any profits, I'm a big proponent of take the damn profits, at least some of the damn profits. Like, it's so hard to make money in the markets. It's not easy, especially if you're only working with, a small 6-digit portfolio, 5-digit portfolio. Like, once you have 7 figures, you can start taking a lot more risks and losses. And I'm not speaking from experience about that yet, hopefully one day. But when you're playing with a little bit amount of money, you got to stack up your gains as much as you can. And that means you got to take some profits. Now, in terms of Roku, look, the problem with Roku is that they're not growing as much as they were growing before. So let me pull up their last earnings report. The whole point of Roku was that they are growing, or not Roku. Roku is it Roku? Is that a Naruto thing? Groku and Vegeta or something. Roku's whole thing is that they grow, okay? And the problem is they're not growing as much as they said as much as they pitched that they were going to be growing, right? And that's why we're seeing some issues right now when it comes to Roku. So if you look at this right here, total revenue is up 20% year over year. That's good, but that's not great. 20% year over year is not amazing, right? Platform revenue is only up 18% year over year. Gross profit up 3% year over year. This is not a GAAP profitable company yet, so they're not profitable. Streaming hours were 26.7 billion, up 4.9 billion hours year over year. That's okay, but that's not incredible. Net active accounts are 78.5 million. They added 2.3 million accounts in the quarter. That's okay. That's not amazing. And average revenue per user is down 7% year over year. Like, it's metrics that are like, okay. I mean, it's not bad. It's not horrible. It's not phenomenal. But are you really going to put $600 million into these metrics? Like, really? When you've got Meta, when you've got Amazon, like, really? And so that's and what the bull case I've heard from Brett Winton. I'm sorry, I always say his name like that. His the chief futurist, but you got to be called Brett Winton if you choose to make your name the chief futurist. Like, I can't take you seriously if you choose your executive title to be chief futurist. I'm sorry. The only one that can get away with that is Elon calling himself Techno King on the SEC filings, because Elon is Elon. Okay, you are just an analyst, Brett. Like, you're gonna call yourself chief futurist. His argument is that the advertising space is going to be an untapped market for Roku with targeted TV ads. How is that innovative? Why do people care about that? Like Meta is more innovative in AI-based advertising than Roku is ever going to be. And also, Roku is a TV. At the end of the day, like, Meta, social, digital is where most of the money is going. There is definitely money being spent on connected TVs, but I don't think it's anywhere near the amount of money, at least right now, that's being spent on digital, particularly on Meta and Google. So it's weird. It's just weird how they justify this stuff. And, it's hard to imagine that that's how they're doing their capital allocation. Not Groku, it's Goku and Vegeta. That's how you know I never watched anime. I watched Yu-Gi-Oh! I liked Yu-Gi-Oh!, but that's it. Amit, if you can give this CPI score out of 10, what would it be? I would give it a 6. It was good because it went down from 3.3 to 3.1, but expectations were 2.9, and that's why that ended up not being the best. Let's get Kramer's thoughts on Shopify. They had earnings today. Let's hear what he has to say.
All right, time for a relatively quick mad dash. We'll have an opening bell very soon. Shopify.
Okay, I have one tonight. The numbers were fine. What people are worried about is the margin guidance for next quarter, and I think it is a little quizzical. 13.6% was what we thought we'd get. Well, it looks like we're going to get high single digits. We have to drill down to that, David. That is where the crux of the matter of why the stock's going down.
Okay, so we don't know exactly.
It's funny. Kramer called this. Kramer said yesterday the market rally can keep going. He said we have a lot of momentum, and then the market tanks 2% today. It's classic Kramer. But he did say there's more momentum to keep it going. He said you should be buying stocks, and essentially he does not see the market-wide decline happening right now. He loves Shopify. Yeah, I mean, well, you got to remember, Kramer loves any company that will do his show. So if the president of Shopify, Harley Finkelstein, is going to be on his show today, he's not going to talk bad about the stock. He'll talk bad about Alex Karp because Alex Karp doesn't want to do his show. But that's why he loves SoFi. I mean, a lot of these companies, I showed that clip the other day where he said Hood is not a buy, but he said to buy Schwab, which is trading at a much richer valuation than Hood. And then the show was sponsored by Schwab in the background. If you look at it, it's just at some level, you got to see where their biases are. And, he might be a little bit more biased to Shopify. I don't short any asset. It's immoral because human lives are affected. Lord Gabon says that. I don't know if you're joking or I don't think that's the best philosophical way to think about it. Palantir right now down 4% of the day. Shorting a stock is just you being bearish against the company. I mean, think about it like this way. Here's how that logic doesn't make sense. If you don't buy Shopify stock, human lives are also being affected. If you buy the stock, they can hire more people, they can make more decisions, they can run their business, blah, 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 blah. So the opportunity cost of not buying is just as bad as shorting, in my opinion, if you're going to take it from a philosophical perspective, because human lives on both sides are going to be affected because some people are going to get laid off. Some people, because the stock is shorted, some people are going to get laid off because there's not enough people buying the stock. So I don't know if it's immoral, but I do think that obviously it's not the best when it becomes super, super aggressive. Irwin says shorting can uncover fraud. So devil's advocate is you're uncovering the lies and protecting people. That is also good as well. Speaking of shorting, and this gets us into a little bit of activist investing. Carl Icahn has made a new investment, and he has decided that his next prey to go after is an airline. And that airline is an airline that has jets and an airline that has some of those jets that are blue. Carl Icahn has taken a 15% stake in Jetblue. Jetblue, really, really, really interesting. Jetblue shares jumped 15% yesterday. Carl Icahn says that they're undervalued. JetBlue has been cutting costs and working to improve operations in an effort to return to profitability after the pandemic. In the past 12 months, their stock is down more than 27%. JetBlue's new CEO took the helm on Monday. Oh, wow. So they just got a new CEO. Let me look at this stock. I haven't looked at this in a while. JetBlue. Palantir at 2409. JetBlue. JBLU. It's up 13% on the day. And over the past 5 years, this stock was at 21 in 2021. Yeah, it's down almost 70% since 2021. That's why Carl Icahn is, oh, wow. The stock got to $3.42 in November. Wow. Damn, at $3.42, we should have taken a look at this. There might have been some juice in this one. Carl Icahn, interesting. So he sees some momentum in JetBlue. Very interesting. Derek with the alert. Hindenburg Research, Renovaro Bioscientists, a worthless AI shell game with a murderous magician past. Okay, so we got some breaking news, folks. We got a Hindenburg report on a new bio pullback, or bio pullback, bio stock. Hindenburg Research. Yeah, they just published. Look at that. They just published this bad boy. You know what's so funny about Hindenburg? People don't know this. I talked to the founder of Hindenburg in October last year because the dude was locked out of his Twitter account and he needed to get in front of Elon. Now, believe it or not, I'm not saying I'm a big deal, but I know some people that are one derivative away from Elon Musk in terms of two derivatives away, because I texted the guy that texted the guy that the guy, I think his name is Jonah, the guy who's, or Nick, who runs Hindenburg, who needed to access. And I was on the phone with him on a random Saturday. He called me up. I was like, how'd you get my number? He's like, oh, I had a guy who gave me, I was like, my number out of all people. And we got his account unlocked. So Hindenburg, if I ever run a company and you want to run a short report, just remember I unlocked your account for you. So hopefully you don't do that to me. So here's the stock. We're not going to read through the entire thing, but Renovaro Biosciences. Okay, a worthless AI shell. Remember they shorted Square, and at the time Square was 70. They ended up being right, and their short was stupid. Their short was like, oh, there's like rap lyrics of people using Cash App to steal money. It was the dumbest report, but the macro ended up helping them, and it tanked the crap out of the stock. So if they didn't close the short, they were right on that stock. They're saying here, weeks ago, Renovaro is a biotech company with several preclinical drugs. It voted to merge with AI health companies JediCube, giving the company a pro forma diluted market cap of $567 million. CEO Dr. Mark Dybul has a prestigious background serving under Anthony Fauci at the NIH. Interesting. And they have a bunch of other notes here for why it's bad. Okay, so where's the stock right now? Let's look if this is hurting the stock. What's the ticker on this bad boy? RENB. RENB. Oh, wow. It's down 25%. Hindenburg strikes again. Oh, my. I don't even know why I'm looking at trying to get the gist of this report. Oh, so it says that one of the guys in the company faked his entire academic history. He forged his Russian medical degrees, and he was a magician who had fled authorities in Turkey. This guy was doing card tricks? This is crazy. What the fuck? He tried to steal money from a terminally ill cancer patient. Bunch of other red flags. It's saying as soon as they merged with the AI company, their stock was up 83% of the day, trading at 78.5%, 78.5x its preceding 30-day trading volume. Yeah, look, I don't know if the short report is correct, but it definitely doesn't look like it. It looks way better than the Square short report already. Renovaro down 25%. These biotech names is so hard to be long on because you never know what's going on in the biotech names. You just never know. Crossroads says their short would have been that Dorsey is a blockhead who bought Tidal. Yeah, honestly, that would have done it. Where's Square right now? It's at like $60, right? So Square bottomed at 39. Now it's at 65. Yeah. So they shorted when it was at 70, but it didn't go to 39 until like 5 months after. I think they closed the short before then. So I don't know if they made any money on it. But if they waited till October, they would have made some money. Now it's at 65, but it doubled from the lows at 34. Robinhood only down 2.7%. Where's Palantir? Palantir 2390. Okay, so there's a little bit more. Let's look at the order flow right now. $120 million left Palantir. 94 million came in today. So you got more sell side down 4.7% right now. SOFI down 5.47%, recovering a little bit. SMCI down 1.88%. S&P down 1.49% of the day. 493. Amit, I think you forgot the cowbell at the start. No, we did the cowbell. We did it at the market open. Right when we saw everything tank. For those that are just joining again, CPI came in hotter than expected. Came in at 3.9 on the core versus 3.7, and then it came at 3.1 versus 2.9, and that's what's got the market a little scared right now in terms of where CPI is going and what is going to end up happening to overall CPI. And that's why we're seeing a little bit of fear in the broader equity markets in the context of CPI. Let's listen to 314's Warren Pies, his argument for why people still want equities, even though we got a hotter CPI. Here we go.
Paranoia out there and fear in the market. And I think there have been a lot of people who missed the rally. And we're up 19%. At the end of January, at least, the S&P 500 was up 19% in 63 trading days. So that's, for people who don't count in trading days, that's one quarter. And that puts us in a top 3% kind of move. So it's been a massive move, a crazy run, and we're overbought. I mean, that's in logic tells us that the next move should be some kind of serious correction. You give a lot of those gains back. And so I'm prone to the paranoia, prone to the skepticism and pessimism, just like everybody. But so what we do is we use data to combat that. And we look at the data and study the history of overbought markets like this one. The message is really clear. It's actually a bullish phenomenon. You end up with a pullback or consolidation, and the pullback's usually pretty mild. and then you continue higher in the year following. So we've had 12 of these events, these 19% surges, as we call them, and there have been very little pullbacks in that data set. And so I think that the paranoia and the concern about an overbought market is really misplaced. You should probably flip the way you look at the world and think of this as there is a lot of demand for stocks, and there's a lot of people who want into this market.
So it sounds
and again, yeah, I hate to belabor the point, but we do have 6 trillion that are on the sidelines that I think are waiting to get into the market. The question is when, and timing it is really hard. But even if we only get $1 trillion out of that 6 trillion or 500 billion, that's going to be a lot. S&P inflows last week were also the highest in a couple of weeks that we've seen in a while. Yeah, I think we added like 17 billion last week to the SPY, which was a lot more than people thought. Yeah, 5-year monthly flow has been higher than it's been in the past decade for the S&P. I mean, there's been a lot of money coming in. You got to ask yourself, where's that money coming in? One of the things I heard yesterday that was actually really interesting is that a lot of money just might be start flushing around, right? So money might be going from, small caps into large caps, or large caps into small caps, or into Bitcoin ETFs, into yada, yada. People make some money off Robinhood today. They're going to take that money. They're going to dump it into Tesla because they want to be long Tesla, and Robinhood's a trade. Like, there's a lot of different things that are going to happen in regards to how money moves around. But the broader point is going to be, is there a pullback that causes everyone to wait on the sidelines and just chill out? Or is there going to be retail FOMO, institutional FOMO chasing even higher gains than 500 on the S&P? So we will see. We will see what ends up happening. Arthur says, I think if NVIDIA brings bad numbers and most importantly, bad guidance, we know it's an AI bubble. Yeah, and again, I don't think it's necessarily a bubble, because I don't think the guidance, even if it's not as good as what the market expects, means there's a bubble. It just means valuations have gotten so high. Like, a bubble to me implies that this is all a fraud, it's all fake, nothing's real. This is very real. We know it's real. Like the numbers Palantir put up, the numbers Microsoft put up, it's Azure Cloud AI growing 30%. Like, at some point, you can't grow an AI business on top of your cloud business at 30% year over year if there's not demand for it. The question is the market giving $500 billion to NVIDIA in 5 weeks just too quick to reconcile all that demand? And I think the answer to that is yes. And I think a lot of people think that as well. But now the numbers are ultimately going to prove if that's true or false. NVIDIA stock today, maintaining 700, guys. It's not going down. 1% down is nothing. It was down almost 4%. It was getting below $700. It's maintaining its levels. The market bought the dip. The market bought the dip. So we're seeing that the market is here. Timing Palantir isn't hard. I don't know, dude. I think timing Palantir is a little hard right now. I mean, Palantir 23.93. If you're shorting Palantir back to 17, 18 bucks, I think we're not going to see that until there's a broader correction. And if there's a broader correction, then everyone's wrong. And so you're not really necessarily right on that. I don't think Palantir by itself is going to get to 16, 17. I don't think so. I think we got to have an entire market coming down. I think that's got to happen. Otherwise, that's going to be tough. Oh, Bitcoin's falling. Where's Bitcoin? 48.5. 50 was nice while it lasted. We'll see if it can keep going. 48.5 right now on Bitcoin. That's down 1,500. That's down 1,500. Vincent says market doesn't go up in a straight line. I agree. What's a small AI health drug company for the near future? Well, I don't know if it's small, but I actually think Palantir is a phenomenal company in the drug discovery space. And I think they're going to be a big player. They're working with Novartis right now. But I don't know of a smaller AI health drug company. I wouldn't bet on a smaller AI drug health company. I would bet on the bigger ones. Eli Lilly, we haven't talked about them, but these guys have also had just an incredible run. They're at 738. They're green right now. Their stock's up over 200% in the past year. 5 years ago, so what? They were 111 in 2020. They're at 738. It's kind of similar to SMCI, but it's not as straight up as SMCI went, and SMCI happened a lot quicker. But I mean, SMCI happened in a year. Eli Lilly took about 3.5 years. But Eli Lilly is one of those companies I think all of us missed. Let me know in the chat if you have this. They have been innovating on the drug side really well over the past couple of years. And their earnings have put up the numbers as well. I think they had earnings a couple of weeks ago, if I'm not wrong on that. And that's why we saw them surge over $700. They were at like 640. And so that's what we're seeing in terms of the pharmaceutical space getting momentum as well. To answer your question, DNA would not invest though. Yeah, I mean, that's actually a good question. And this is not really drugs. This is more of a tech play. as like an incubator for drugs. Again, DNA is a synthetic biology company that creates a platform for other companies to use their platform to make drugs. This is a classic case of a company that sells a beautiful vision that Cathie Wood has bought into aggressively. Shyam Sankar is actually on the board of this company, which is one of the only reasons I also think DNA is not a fraud, because Shyam Sankar's there, and hopefully I'm not proven wrong on that. But it is a stock that has been decimated, dude. Insiders have sold the crap out of the stock. The stock was $15 billion. Now it's $2.9 billion. Cathie Wood was buying at $15. She's still buying at $1.38. It's going to rebound eventually. I just, their biosecurity revenue has gone to crap because COVID is gone. Their sell programs are declining year over year. This is not a company I would trust, but Cathie's obviously very, very bullish on it. What do we have here? NVIDIA came out with their own chatbot. Really? Is that NVIDIA has a conference in a couple of weeks that is going to have a bunch of new announcements. Oh, wow. Look at that. Yeah. NVIDIA unveils its own AI chatbot. This came out 1 hour ago. Let's read this a little bit. Wow. That might have been saving NVIDIA a little bit today, only down 1%. NVIDIA's chat with RTX is a promising AI chatbot that runs locally on your PC. NVIDIA makes it easy to run a large language model on your own Windows PC. Wow. Chat with RTX can handle YouTube videos, so you simply input a URL and it lets you search transcripts. Okay. It wasn't perfect for searching YouTube videos, but it does work. You can add PDFs into this. So this is like their own version of ChatGPT, but it's running locally on your computer. So it should theoretically be a little bit faster than Microsoft. The big drawback to Chat with RTX is that it really feels like an early developer demo. Chat with RTX essentially installs a web server and Python instance on your PC. That's what I thought, which then leverages Mistral or Llama 2 models to query the data you feed it, and then utilizes NVIDIA's Tensor Core and an RTX GPU to speed up your queries. Wow. Interesting. So this can do it locally, which means if you don't want to pay for Gemini, Copilot, or ChatGPT to analyze personal files, you might be able to just use something like this if you have your own NVIDIA computer. That's exciting, dude. There's a lot of things NVIDIA is going to keep coming out with in 6 weeks. They're going to keep showing off some of their new results. NVIDIA was actually at a conference yesterday, at like a world government conference, and Jensen Huang was speaking to a lot of the Saudis about basically why he's going to take over the world. He was saying it in a very humble way. But yeah, we're seeing a ton more momentum in the context of NVIDIA. Let's hear like 2 minutes of him speaking, and then we'll end it there. Here's Jensen talking about why AI is going to take over the world. Here we go. Here he is right here.
That the performance of the architecture is going to be improving at the same time. So you can't assume just that you will buy more computers. You have to also assume that the computers are going to become faster. And therefore, the total amount that you need is not going to be as much. Otherwise, the mathematics, if you just assume, that computers never get any faster, you might come to the conclusion we need 14 different planets and 3 different galaxies and 4 more suns and to fuel all this. But obviously, computer architecture continues to advance. In the last 10 years, one of the greatest contributions, and I really appreciate you mentioning that, the rate of innovation, one of the greatest contributions we made was advancing computing and advancing AI by 1 million times in the last 10 years. And so whatever demand that you think is going to power the world, you have to consider the fact that it is also going to do it 1 million times larger, faster, more efficiently.
Jensen Huang pumping his stock without having to actually pump his stock, basically saying, hey, man, this shit's going to get 1 million times bigger than here. So if you want to take a bet on us, then that's a bet on the future. It's going to be exciting. NVIDIA earnings, we're going to see what ends up happening on February 21st, and that's going to be a big, big day for NVIDIA. Okay, we're going to end it out here, everybody. Let's do word of the day. Word of the day, stellar nursery? That's a word? Sounds more like a phrase. A stellar nursery is a molecular cloud in which new stars are being formed. Okay. The vibrant colors emitted by young stars painted a mesmerizing picture of the stellar nursery. The James Webb Space Telescope has captured some of the stunning images of stellar nurseries. A molecular cloud in which new stars are being formed. Palantir going from 16 to 24 was a new star being born. It was a stellar nursery. Okay. So if you're on a date with somebody, this is what you got to say to her. It's about new stars being formed, right? You got to find some way to put this word out there because they're not going to know what it means. Then you can like tell them what it means after you say it, but maybe it'll sound kind of cool. All right, that's it for me. Robinhood earnings. I'll be live with my boy Jesse at 3:45 p.m. So that'll be really fun. Look, I have a big position in Robinhood. This is one of the first stocks that I've publicly put my name out there outside of Palantir, thinking that it's going to be a good play. It's always been a trade for me. I think it's going to go well, but I could be wrong. And that's the risk you have to take when you are a public investor and you make public predictions. So we'll see what happens. In general, I think it could go to $9 if there's a really bad report. I also think it could pump to 15, 16 if there's a very good report. Macro is going to determine a lot. Bad CPI today means that, the sentiment is not the best. It might have the same fate as all fintech stocks in terms of Affirm and PayPal shitting the bed, or it might have a sort of crypto angle to it with beating on their metrics and then giving really good guidance, and it might do really well. I sold half my calls on Friday, so I'm not that exposed to it, but I am pretty exposed, and we will see. The calls don't expire for a while, so if it does shit the bed, I think it'll be okay. Might end up being a DCA opportunity, but we'll see. 3:45, we'll see what happens. It'll be exciting. I'll be here with Jesse. Jesse also has a pretty big position in Robinhood. I think it's high six figure, not high, like 100,000, 150,000. I think he has in there. And so we'll be analyzing with him starting at 3:45. All right, that's it for me. So let's see what happens. It'll be a fun earnings. Thank you everybody for joining. 3:45 will be live, and please make sure to follow on Twitter. If you have not followed on Twitter, I'm putting it in the chat. If you have not made a Twitter, make a Twitter, follow. All good finance updates are there. And we'll keep it going from here. Also, one other thing, I haven't posted a newsletter on Daily Palantir in the past week, and that's because I've been so busy with streaming every day. That newsletter is coming out in 1 hour. If you are not subscribed, but you care about Palantir, it's a free to subscribe, 5-minute newsletter every single day, dailypalantir.substack.com. Please make sure to subscribe to that, and you will get that newsletter in a bit. All right, 3:45, Robinhood. It's time. Been waiting for this for a month. Let's see what ends up happening. Thank you, everybody, and I'll see you in a couple of hours. Have a good one. Bye-bye.